All right, everything looking good over here. About to get this thing started. Welcome back to the channel. Crypto Trend Trader with our Sunday evening market look ahead. Today is August 1st, 2021, 8 p.m. Eastern Standard Time. And before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Okay, so had a nice weekend and about to get started with our new week here. End of our month obviously was a nice finish to the month for cryptos. Also saw quite a bit of volatility with earnings season coming in on our traditional markets. So we have quite a bit to look at. Also saw some potential topping out, some potential bottoming out in some of our different asset classes. Quite a bit of volatility in the bond markets, moves in yields, DXY, etc. So we're going to jump right in and take a look and see what the markets are telling us and what we can expect in the near future and how we're going to make that money. But of course, remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So let's just get started with the 10-year Treasury yield. So we came down, obviously, over the last week and touched our level perfectly. Find support in our green box area, got bought up fairly aggressively initially, but then just kind of leveled out. We are basically just consolidating below our heart line of our massive channel going back for years. We did bounce perfectly the 0.5 Fibonacci level. We still have targets to the downside for potential selling off here. It is important to pay attention to the 200 exponential and 200 simple moving averages here in blue. We will notice that the 200 exponential is now sloped to the downside. We are below both of those moving averages, and if we stay below them long enough, we would expect these to enter back into a consolidated downtrend. It's not uncommon or unrealistic to think that after a move up for basically from August last year until, we topped out, but essentially consolidated around this range. It was about a year move to the upside, so it's not unrealistic to think that we could consolidate and continue to sell off on the yields for the next few months. Everyone was calling for zero rates forever all through this range here. We knew that it was going to push powerfully to the upside, and then once we got to the upside, everyone was calling for 2, 2.5%, 3% by end of year. We knew obviously that was not the case as we were falling out of this channel and consolidating at a strong resistance. And then obviously we would expect this to sell back off. And once again, once everyone gets extremely bearish on rates and extremely bullish on bonds, I'm sure price action will reverse once again. So it is important to notice that we do have on our indicator oscillators bunch of green histograms on the daily. We are still below the slope line and we're still well below the zero line, but we could be potentially bottoming out in this area. We did not display any specific divergences or anything on the shorter time frames, but we did come out of the bearish control zone and get the hard buy signal here in blue. And now we are starting to push to the upside, but we do have this blue stochastic kind of curling over. It's not uncommon to see it curl over, find support, and then continue back to the upside, but we'll pay attention to that. Let's zoom out and look at our weekly here and see what it's telling us. The weekly has crossed the 821, the red and yellow moving average to the downside. We are inside the bearish control zone. We have all red histograms on the weekly, and we are now below the blue slope line. So again, it's not unrealistic to think that at this point in time, we just got a reaction rally off the 50 Fibonacci level, the 0.5, and also the 50 simple moving average, the darker green one right here. We could easily push back up to the upside, get a rejection, and then continue down to our target just below 1% yield, which is not unrealistic. And that would obviously correspond with bond prices continuing to go up. So we're expecting a push down somewhere in between the red 236 and the yellow 382. I do expect continuation to the downside on bond yields for now. We do need to pay attention to our monthly chart though. If we just kind of zoom out here, we did get the cross of, let's turn off our drawing tools. We did get the cross of the 821 to the upside here. We pushed down though below it and essentially got a rejection, closed our monthly below that level. So, at this point in time, it looks to me like yields are going to continue down and this potential inverted head and shoulders is probably not going to play out. We are very close to taking out the parabolic SAR here in green. If we do continue down here to around that 1.0 level and take out that parabolic SAR, it's going to basically tell us that we're expecting a longer consolidation to the downside. What it looks like on the monthly here is we left the bearish control zone. We got the hard buy signal. We had a powerful trend to the upside. We got up near the bullish control zone. We are now consolidating or getting rejected off of the 55 exponential moving average. We are above our slope line here in red, but the slope is first month of red has shown up here. For last month, when this opens back up, it could easily flip back to green or stay red. What we would expect to happen is this to push back down and then bounce eventually off this slope line and then continue to the upside. How that corresponds with our moving averages, etc., we'll have to wait and see. But I do suspect at this point in time, and it looks very clear based on this chart, if we turn off our moving averages, we were just basically bouncing through this range since the 1980s. I would expect us essentially to be bouncing right around this heart line here in yellow, sort of like the middle of the channel. We could easily just consolidate around this range, even sell back off, and then over the next couple of months move back up. At this point in time, though, we do need to wait and see what's going on. Obviously, as the market becomes more and more fearful, we would expect yields to go down as bond prices go up, and there's a direct inverted correlation between those two. The actual percentage yield that the bonds offer does not change, but as the price of the bond goes up, the percentage yield goes down. So if you buy something for $100 and it has a 1% yield, you would get $1. If you buy something for $200 and it still has that same 1% yield, but the price is up by 100%, you're only getting a half of a percent, because you're getting 1% of the initial $100 purchase price, but now it costs $200. So if you're getting $200, you're only getting half a percent. So that's how the correlation between those works. So it's important to understand that while this does look like it's still going to continue to the upside, it's not unrealistic to think we could sell back off heavy before we get that continuation. The main thing we're paying attention to, and we have a specific example right here where we come out of the bearish control zone, we get a hard buy signal, we move all the way up to the top of the range, and then we come down, and you'll notice here we actually retest the low. Come all the way back down to the low, and then we come up here and we actually take out the high. So realistically, what we're paying attention to is, where does this decide it wants to stop? Is it going to stop here and then continue to the upside? Is it going to stop at the 236 or the 382 in yellow here? And again, the yellow Fibonacci goes from our top back in 2018 to our bottom in 2020 of March of 2020. And then the red Fibonacci goes all the way back to 1981, the top here, to the bottom here in 2020 in March. So these key levels are what we're paying attention to. We've seen quite a bit of interaction with these levels in the past. Red Fibonacci here, red Fibonacci all through here, red Fibonacci all through here. Resistance through this range on the initial dead cat bounce, consolidated at it, and then burst through it. So it's not unrealistic to think we come back down and retest it. And if it maintains support here, we get the continuation to the upside. If it fails that support, we could easily come back down to even a new low. I mean, you know, we went down to 0.39%. It's possible we get down to like 0.25% or something like that. I don't think it's as likely that we get down that low, but it is definitely a possibility and worth paying attention to. So, and then obviously we have the inverse relationship. This is the TLT, our 20-year treasury yield. What we did here is essentially we have the opposite pattern, what potentially looks like a head and shoulders pattern. We've come all the way up to what we would expect to be the area of the shoulder. That is from our Fibonacci level back here down to our Fibonacci level right here. So from the top to the bottom, we have almost hit the 50% retrace of the move down. So if we get up to the 50%, that would give us on the 20-year treasury bond a price of $150, roughly $5. And then we could easily get up to the top of the channel and also the 618 up near $160. And again, that's that fear trade. A lot of older investors, traders, etc. will run to U.S. bonds as they are like the safety play, especially when there's, you know, craziness going around the world. So here is our channel going back on the weekly from 2007 till present. We'll see we operated inside of this blue channel with the green heart line for almost the entire time throughout this period. But we also put in what amounts to like a parabolic support to the upside. So at some point in time, I expect us to come back down to this area, but we bounced the heart line perfect after continually selling off. If a situation arises where the Fed gets scared and has to do something about interest rates and all of a sudden stops their purchases of bonds or mortgage-backed securities, or at least cuts back on them, it is potential that we could see this leveling out or even selling back off. But as far as I'm concerned now, if the Fed is not tapering their purchases, and they're definitely not going to be raising rates anytime soon, I would expect bond prices to continue to increase, especially as volatility in various markets increases, as well as people will get scared and run to these as a safety play once again, as I've said. We see we are inside the bullish control zone on bonds. We have a bunch of green histograms in a row. We have crossed over the slope line. Once again, it's not unrealistic to think this could come back down, find support, and then continue to the upside. Or again, this could be a rejection area. We did get our weekly rejection directly at the 382 after pushing up above it. And then our monthly close was essentially a perfect rejection of the 382. So again, it's not unrealistic to think we come down here, try to find support somewhere. If the support holds, we get continuation to the upside. Or maybe we just open right back up and continue pumping to the upside. Again, it depends how scared people are, and how they handle the situation. So, if we all of a sudden see massive like Delta scares and lockdowns and craziness around the world, I would expect bonds to continue to the upside. If some of this pressure and scare tactics from the media and from the government starts to ease a little bit, I would expect the bond prices to sell back off, and then other assets to continue to the upside or reverse to the upside, depending on what you're looking at. We are well below our slope line here. The slope line is blue. We're very close to the bearish control zone. So even though we got this reflex rally to the upside, it looks like over time we are probably going to be continuing to the downside. So we have our target down here for bond prices, 20 years down near like $130. I don't know that we'll get there. If we do, it's going to very much look like this head and shoulder pattern is playing out, which is obviously a bearish pattern. So yeah, enough of those bad boys. Let's flip over here real quick, and we will take a look at the DXY dollar index. And obviously, you guys know what this is all about. We have essentially what amounted to the potential of a inverted head and shoulders pattern playing out right here. Something like this, or potentially a yellow resistance right here, horizontal, with an Eve and Adam, or an Adam and Eve bottoming pattern, a double bottom. We essentially have some divergence playing out here. We had a low, and then here we had a same or slightly lower low, depending on what time frame you're on, etc. And that corresponds to our double bottom pattern here. As we took more energy to get down to that level here, we took much less energy to get down to the level here. So we got that powerful move to the upside. We were unable to break through our support right here, and then we started to sell off. We demonstrated on shorter time frames basically what we had playing out here, like on the daily, was some bearish divergence and some bullish divergence. And obviously we were in a uptrend, a channel slope to the upside, and then eventually we broke down from that channel. The bearish divergence is now playing out. What we would expect to play out though is this continuation to the upside eventually. But we have essentially gotten from our breakdown here, the measure move of the channel would take us down to roughly the area we're at, retest this area as support. If it holds as support, continuation, consolidation, and then eventually our break to the upside. But, we were at elevated levels. We had a powerful move up here, and it was definitely looking like it was starting to weaken. Also, as the U.S. prints trillions and trillions of dollars, or, floods the monetary system, we would expect, obviously, the DXY to weaken compared to other currencies or other countries' currencies, which are not going excessive as we are. But since we live in the United States of socialism, it's not unrealistic to think that the money printer will continue to go brrr, as they like to say. But we do see a bunch of red histograms on the daily here. We do still have the blue slope line, but we are clearly under it. We're at the zero level. It looks very likely that we're going to get some continuation to the downside. I don't think it's unrealistic to think that we come back down and test some of these key levels. On the weekly, we can see here, once again, it's very clear the bullish divergence that we got here. One drive, two drives, and then the third drive of bullish divergence. We had a high here, a low here, and then same low here, a low here, a higher low here, and then a third higher low here. We have now flipped over this slope blue on the weekly. We got the hard buy signal coming out of the bearish control zone. So I do expect a slight consolidation here and then continuation to the upside. But again, that's a weekly chart, so it could easily last for a few months. And then finally, this is the most important chart to look at, in my opinion, for now. Let's turn off our drawing tools and just pay attention to what's actually happening on price action. We have left the bullish, bearish control zone, and gotten the hard buy signal on our monthly chart. And, just looking at the previous times this took place, here was our monthly when we left the bearish control zone. We got 9.5% continuation to the upside. When we got the hard buy signal here and left the bearish control zone, 22.79% to the upside. when we left the bearish control zone and continued to the upside here, you know, we easily got over 30% to the upside. And then finally, the most recent time when this happened, you know, we left the bearish control zone and we got basically what amounts to like an 8 to 10% move to the upside. So somewhere in between an 8 and, you know, 30% move to the upside in the dollar right now on a monthly time frame would not be unrealistic. We also consolidated, basically went sideways in this range since 2017. This was back in 2017. We flipped the slope line from blue to red. And then since that time in 2017, we were basically at 96.84. Now we're at 92. So we essentially just chopped sideways at the top of the range while we got a bullish reset on our indicator oscillators. So what I expect to happen is we have 3 green histograms in a row. We have the hard buy signal. We're getting ready to exit the bearish control zone. Also, if we turn on our moving averages, we can pay attention to them as well. You know, we still have the 821 cross to the downside here, but we essentially found support and are bouncing the 200 exponential, and we found support before the 200 simple. We're now above both the 200 exponential and simple moving average, and we'll notice that the slope on the 200 exponential is slightly sloped to the upside, and the slope on the 200 simple is slightly sloped to the upside. That to me is the beginning of a bull market in an asset once we close on top of those moving averages and they both have an upward slope. And then when we're looking at a monthly chart like this, we can look back and see that the last time this ended when we were above the 200 exponential and simple is when they were initially populated, and that was back in 2002. Since 2002, we have been in a bear market on the dollar, and now we are above those 2 moving averages, and they're sloped to the upside for the first time in existence on this chart, which goes back to 1986. So that tells me that the dollar is going to be strengthening over the next few months or years to come, as this is once again a monthly chart. But in the meantime, we have consolidated above the 8 moving average, got rejected at the 21. I would expect us to consolidate around this range and essentially chop sideways before coming up here and testing one after another these moving averages. And as we do that, that's going to basically be us chopping through the same level of resistance in yellow and white here, and then eventually busting through and coming up to that 95.69 level, or eventually getting our measure move up to 98, or even potentially up to a new high here. It's not unrealistic to think, as we look at these Fibonacci levels that go way back, literally decades, we could see potential move like that. If we look at our time cycle analysis, here we have a top back in 1985. Here we have a top in the dollar in 2001. Here we have a top in the dollar in 2017. So the next top in the dollar, according to our 3 points of time cycle analysis, would lead to a top of 2032. So 2032. So we have obviously, you know, potential decade of sideways to down action, eventually leading to a new high, or just moving straight up to a new high. We don't know, obviously. We only have a few data points, but based on this chart, based on the monthly, based on what it's telling us here, and the amount of time that we go sideways to down, that I don't think that's an unrealistic possibility. From the bottom here, as a matter of fact, let's look at one more thing with time cycle analysis. Let's take our bottom right here in 1992, and we'll put that out, extrapolate out to our bottom in 2008, and let's switch that one to blue. That gave us our bottom in 92, our bottom in 2008. This tells us that we're going to potentially bottom on the dollar in 2023. So again, it's not unrealistic to think we sell back off here and come down lower on the dollar, or just chop sideways or whatever. None of those things I think are out of the picture. We obviously only have 2 data points right here, so we don't have quite as much information as we would like, but based on our Fibonacci levels, based on what we're seeing here, our divergence on our different time frames, etc., I don't think it's realistic to see a strengthening dollar, as everyone else is extremely bearish on it. Also, we will notice here we have a low back in 2018, and we have a higher low, assuming that this ends up being our swing, and this is not just a bounce here and then sells back off here. We have a higher low, and then if we go to our indicator oscillators, we'll notice we have a low here and a lower low, bullish divergence. We have a low here and a low here, and same or slightly lower low. Again, either way, bullish divergence. So could we get a third drive of bullish divergence and push down even lower and then catapult to the upside sometime in the next couple of years? Yes, definitely could. So it's important to keep this stuff in mind Pay attention to time cycle analysis patterns. This could easily be a double bottom right here that breaks out. It could easily be a double bottom that fails and continues back down here, puts in a third drive of divergence on the monthly, stretches out over the next couple of years, and then eventually finds our bottom around 2023, like we said. So we'll have to wait and see, you know. Have to wait and see. If there's one thing we know about the markets, it's that they're going to do whatever they want, not whatever we want. So it's important that we position ourselves accordingly, so that no matter what outcome happens, that we end up favorably, benefiting from that outcome. So, all right. And I think most people don't realize that. They think diversifying is buying Bitcoin and then also altcoins, or buying Tesla stock and then also Apple stock. But the truth is, actual diversified portfolio is going to have a complete range of assets, everything from, real estate, stocks, bonds, cash, crypto. That is actually diversifying your portfolio. Obviously physical gold and silver is crucial, guns and ammunition, food, all different things. So let's look at our indexes and we'll get rolling here. I'm just going to say what's up to you guys. What's up over there, Lazy Boy, our kids? Good to see you, my man. Just here for the rants. I know people love the rants, man. Weekend, monthly end, Bitcoin drops. Scam exchanges must be pleased hunting those over. What's that say? Oh, over leverage longs. Also enjoy the rants. Yeah, I know people love those rants. Or NFTs. Yeah. We'll see, man. I like that. That monthly close was pretty nice. Weekly close was pretty decent on Bitcoin. I think it's pretty realistic. The 4 hours getting ready to cross the 821 to the downside. Obviously everybody in the group knows that I shifted into altcoins after the initial run up on Bitcoin, and then took profits on quite a few of those altcoins. Ethereum has been showing pretty strong, but obviously once again, taking profits along the way. I am not a greedy person. I'd like to just make gains. I would rather make a little less gains, but guarantee them, than go to sleep and wake up in the morning and those gains be erased. So let's take a look at the Dow Jones Industrial Average, and we'll talk a little bit about the technicals, what's going on, and what it looks like is going to happen based on those monthly closes, etc. So Dow Jones saw some weakness here, but still consolidating above that key level. Again, we're seeing a little bit of bearish divergence taking place here. I don't see any reason to think that this is not going to continue to the upside at present. We're well above our moving averages. This is the only thing that has me paying attention on the weekly chart. We put in a bunch of bearish divergence. We then have all red histograms in a row. We are now below the slope line, and the slope line is almost neutral to flipping to the downside. So on the weekly, it looks like we're getting very tired up here, especially just consolidating at new all-time highs. I think it's very likely we could sell off back down to like this 33,000 range. We'll have to play it by ear and see what happens. We did get the divergence signal, sell by sell at the top of the range, and then we continue to a slightly higher price. Look, the weekly looks indecisive or potentially toppy, but the daily and the monthly, they look fine, honestly. We're seeing no weakness in the monthly. But that's on the Dow Jones, and keep in mind that we have a couple key stocks essentially holding up all these markets. So S&P, again, we saw a bearish divergence. We had a high here and a lower high. We have a high here and a lower high. We got the bullish control zone. We're at elevated levels. But what I'm really paying attention to is the close of that monthly candle below this slope line. This blue slope line goes back to May of 2020. It has been acting as support. We have a couple closes below it here, but regain that level. We have closes at it all along the way. We had once here, we closed gap down, closed, and then continued up here again. But now you'll notice that the frequency and the moves we're getting off that slope line are decreasing. So here, we touch it in May of 2020, then we don't actually touch it again until September 2020. And then here we touch it again and break down in October 2020, and then we don't touch it again until, March of 2021. But then after the March 21 touch, we touch it again in March of 2021, then we touch it again in May, and then again in May, and then we break down from it in June, and then we break down from it again in July, and now here we are consolidating at it. This is weakness. The more times we keep bouncing this and the less of a bounce we get, the more likely it is to break. we want to see a key support level like this one acting as support. And every time we come down to it, the bulls reject it and we continue to the upside. Bulls reject it, continue to the upside. Bulls reject it, continue to the upside. Barely, 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 barely fail. So when does it fail? We don't know yet, but we're paying close attention because we do have bearish divergence and we are just slowly weakening. Now, this thing's not just going to go to zero, but we have a very, very key support line back here, the heart line of the channel, and also this blue horizontal support as well. And that's going to take us all the way back down to like $368 or 3,680 roughly on like the SPX. I do think it's still very possible we get back up here to like $460 and put in that new all-time high, or 4,600 on the SPX, but we'll have to wait and see. We'll have to wait and see. These earnings moves have not been the best. They're not terrible, but overall, we've had a ton of beats, and poor overall performance afterwards. Typically, market's already got it priced in, etc. But let's see. We're seeing a lot of forecasts here for the next quarter. And honestly, I think the next quarter is probably going to be atrocious for most of these companies, as, most of that stuff was already priced in. And, we probably have peaked in growth, at least for like 2021. So here we are still inside the bullish control zone. We did get the hard sell. We are still very, very elevated here on the weekly. Again, the weekly close outside that level, sort of scary looking. Also, our bearish divergence here on the weekly. We have a high and then much lower high. We have way more red histograms than green histograms. Here we'll see we have 1, 2, 3, 4, 5, 6, 7, 8. We have 9 red histograms to 3 green histograms while we're putting in all-time highs. So what does that tell me? This move is unsustainable. There's more, the momentum is being lost. So, what's happening right now? I think it's essentially we're topping out, at least short term. What kind of pullback are we talking about? Are we talking about a capitulation event like this? I don't think so necessarily. I think we're much more likely to see a situation like this where we have like a 10% drop and then see what happens after that drop. I don't think we're just going to get some big 30 or 50% capitulation event. I think a 16% is probably the maximum right now. And I don't even think that that's likely. I think there's a couple places along the way that I think we would stop off first. And I think the market psychology is, buy the dip, and it will continue to be that until it doesn't work. So at about a 6% pullback, we have some very key support here. And then again, at a 10% pullback, I would probably buy a 10% dip, depending on what everything looks like, and then play that by ear. It's also a nice round number right around that 400 range. And then I would see, essentially, do we just come back up and put in a lower high? I do not think that these markets are just going to dump like everyone is saying right now. I think we're going to have to see, people are conditioned like Pavlov's dog. Every time that bell rings, they drool. Every time there's a sell-off, they jump in and buy. And it's been working. It's been working. There's so many new people to the market. There's so much free and easy money just getting pumped out. All you got to do is lay on your back and wait 9 months and you get a check from the government for, the next 18 years or whatever. There's so many programs out there. People have been paying their rent. I mean, look, it's easy times right now. It might be a little unstable and people are worried about this, that, and the other. But let's be real. Life has never been so easy, at least in the United States. What? You got to worry about getting sick, but at the same time, you don't got to pay your rent. You don't got to pay your bills. You don't got to worry about nothing. All the asset prices are pumping. Let's be real here. It may seem like hard times, but this is not hard times. If we get to hard times, we'll know it. But this is not hard times. We do need to be very careful, though, because going back to 2009, we have a very clear channel here on the S&P, and we are very, very close to the top of the channel. Top of the channel is obviously, that $460 range or 4,600. That's where I think we'll top out, somewhere around there. We have topped out every time we have touched that channel, and every time we have either went into a time or price, capitulation or consolidation. Here we had a 16% pullback, which would be right in line with the heart line test, which is what we did here. Here at this one, we had a 20% pullback to the heart line and found support on it. Here, we basically just consolidated at it, and then although the pullback was 15%, we went sideways from that point in time from 2015 to 2016. So this was a price and time capitulation. And then here we are at that top range. Again, we could easily see like that 16 to 20% pullback. But right now in the monthly, we're at elevated levels. I mean, we're at 96.5. Every other time we've come up to that level, that was the top in the market, that was the top in the market, that was the top in the market, this is the top in the market. It just hasn't happened yet, in my opinion. Again, this is on the monthly, so still overall strong, but we are seeing some serious weakness and some potential warning signs. Does not mean that we do not put in higher highs. IXIC, the old NASDAQ technology. Once again, potentially putting in bearish divergence here. We have to wait and see. We don't know yet because we could easily just continue to the upside. We have, however, seen, the slope line is blue. We have now broken down below the slope line. So are we potentially topping out? Are we rolling over? Are we getting ready to leave the bullish control zone? Probably. Still above the 821. Still cross to the upside. Well, still above the 21, but they're still cross to the upside. We're definitely going to find support here. After that, do we go down lower? If we do 14,300, we have a very, very strong support back here, but we already broke down. We broke through this ascending triangle, broke through, came back down, retested it as support. That's what I like to see. That's extremely bullish to me. But then we came back up here, put in a higher high, but we put in a lower high on the TJD TDMACD, put in some bearish divergence here, and now we're coming back down. I do not want to see this come all the way back down to that level. If we come back to that level again, I think it breaks. This is going to look like an M pattern or a double top pattern, and then we'll end up back inside that range, which is not good. More likely than not. Again, we would then see probably a retest somewhere down here in the 200 exponential and simple. I do not think that is as likely to happen right now. I think that more than likely we continue to the upside up here at like 15,717. But the moment that we start to see this is starting to develop more and we're starting to get evidence from the market, which we're already seeing some evidence, but not enough to say now we want to be positioned to the downside. I would much rather have a slightly bullish or neutral posture in these markets, or potentially start looking into like longer term options plays, as this could easily develop over weeks, months, or years. And then when we go to the weekly here, we'll see once again we're at extremely high elevated levels up here. 93, not that high, but again on the weekly we have seen bearish divergence from this point to this point, and then once again to a new all-time high here. It's possible that we come back up here, invalidate the middle point, and we just have from the top to the bottom, but we have lost the red slope line. We're very clearly below it. We're seeing multiple red histograms on the weekly, and we're at all-time highs. That tells us it's unsustainable. If we do not see, sustained or regular or increasing buying coming in here at these levels, we're not going to keep going to the upside. On the monthly, everything still looks bullish. We are getting a little weak up in here and potentially close to cross to the downside, but very clearly still inside the bullish control zone, very clearly still bullish and moving to the upside. Now here's where we really start to see some weakness. Here's the old ruddy, the Russell 2000. On the daily here, we are trying to move back to the upside, getting rejected at the heart line. If we turn off our moving averages, we're trying to cross the 821 back to the upside, but we have basically been chopping sideways. We entered this channel for the first time back in January of 2021. So we've spent over 7 months inside this channel. And if you look at right here, the heart line of the channel in February of 2021, we have literally chopped sideways, and here we are back at February 21 prices. So for the last 6 months, the Russell has done nothing. It has just oscillated inside this range. You guys know how I feel about range trading and channels. The more time we spend inside this channel, the more likely we are to continue inside this channel until the one time we break. We had a couple false breaks here, but we never broke out of this channel. So if every time we bought support down here and every time we sold resistance up here, we would be continually winning until the one time we get a break and continuation in the direction of the break, whether it be to the upside or the downside. Our measured move would be essentially from the top of the channel to the bottom of the channel, and then essentially a break, which would take us down to 236 from our previous top right here, telling us that we have potentially topped out and we could expect a consolidation lower, or potentially even like a solid breakdown. Now in the event that all of a sudden this strengthens, which I think the Russell is, this thing is going to underperform substantially compared to all the other indexes. The Russell is trash. It's full of low companies. It's full of zombie companies, total trash. Over 50% of them right now are not profitable. And, as crazy as that sounds, we do live in an age where you can be a for-profit business and not actually make profits and still be worth tons of money, because that's how we do things now. Is that sustainable? No, definitely not. But with low rates, is it sustainable? Yep. Here on the weekly, we'll see we have lost the slope line. The slope line has flipped over red. We have almost all red histograms. We have gotten the hard sell signal. We have left the bullish control zone. We are powerfully angled to the downside. And while we did initially get a bounce off of the knife right here, you can't even really see it because it happened right at the hard sell signal. But the knife came and stabbed all the way down here to like that 12 range. That is a very, very powerful knife stab. The last time we saw something like that was back here. When was that? If we look at the chart, that was in our capitulation event. So we saw a very powerful stab down and then a reaction rally to the upside. Will we see continuation now to the downside? I think more than likely, yes. It's just a matter of how long or when that happens. Switching over to the monthly here, very bearish monthly. We obviously just ate the last 3 monthly candles. We see our first red histogram on the monthly here. And again, we're still inside of the bullish control zone, but we are starting to roll over here on the monthly. Typically, when we roll over, it lasts for you know, this was January to July. So are we going to get, you know, the same type of multi-month, you know, sell-off or sideways consolidation or capitulation event? I think probably, yeah. I think the Russell is probably going to get crushed here before long. But I think a lot of individual stocks and perhaps some of the other indexes will do well. But I'm not ready to call this thing quits quite yet. I mean, I'm not buying the Russell, obviously, but the overall stock market. Let's look at our sectors here, and then we'll jump into tech, and we'll look at our crypto, and then our commodities also. XLB. Materials looking decent. We got the breakout of our consolidation or downward sloping channel. This is obviously a bullish pattern. We are looking at, I had forecasted that to start a little lower, but you know, basically from our breakdown or our consolidation move right here, we're looking to move somewhere up around 87. We also have obviously the trade setup in place. Very tight stop loss, meager 5% to the upside. You know, just to show off a trade setup, but I'm not taking trades like that. It's not. There's way better places to put your money. You know, more volatile areas. But materials looking decent, but still not even close to its all-time highs. XLC communication sector again. You know, gapped up to the upside. Are we just coming down here to fill the gap? Probably. Do we see consolidation continuation? We'll have to wait and see. Again, seeing some very clear bearish divergence taking place here. You know, trying to hold on to the 821. Got a very clear rejection after we lost the 8 as support. Again, you know, this just put in new all-time highs, which is good, but now it's not looking so great since then. Communication, I expect to stay stronger than most, though. XLE energy. Energy is still well below its all-time highs. You know, oil obviously makes up a decent amount of this as well. I do think oil will continue to the upside. I do not think that energy can do this by itself just with oil. And I think that a lot of these other like green energy trades and everything got way ahead of themselves. We'll have to see natural gas. We'll have to see how everything plays out. You know, obviously regulations and everything have stopped fracking and quite a bit of other stuff. So that is going to negatively affect this space. But energy is one of the most undervalued sectors in the market. Does that mean it's going to all of a sudden have a burst to the upside or it's a good investment? No, energy is usually not a great investment, but maybe we'll see that change. Here we're looking at a potential topping pattern. Here we have a left shoulder, a neckline, a head. We came back down to the neckline again. Are we going to get a performance back up here like the $54 range, put in a very clear head and shoulders, and then break down from there? I don't know. We'll have to wait and see. We are seeing some strength coming through here. I do expect some continuation on energy in the short term. Overall, though, energy is a massive underperformer in this crazy bull market that we've had over the last year plus. XLF. Financial sector looks like crap to me, consolidating and selling off, basically going sideways, showing a slight bit of strength, but nothing that I like right here. You know, this basically going back to April of 2021, we're right back at those same prices again. So while some stuff has been putting in new all-time highs, financial sector has not been looking so great. We're looking across 821 back to the upside. We're looking at what amounts to a bullish consolidation as we just go sideways for weeks and don't go down. But I'm definitely seeing some weakness in this chart. And then if we switch over to a little longer time frame and look at the weekly, we're basically just able to hang on to the 21, but we're getting rejected by the 8. I think we're going to chop around in this range until we break back above the 8 and start moving to the upside on a weekly or monthly time frame, or until we get back below the 21 and then see like some weakness coming in here. I think we're just going to chop sideways on this. But when we do get a break, you know, what are we looking at on the financial sector? You know, from this to the top of the range, again, 5.5%. Nothing too crazy, but if we get a break of the 21 to the downside, we're looking at like a 10% move. We are seeing a bunch of weakness week after week after week. We're now below the slope line, and it is still blue, but barely. I do not think that the financial sector is looking so hot right now. Industrial, again, just chopping sideways for some time here. If we look out at the big term, long-term chart here, you know, we can see we're operating inside this yellow channel here. We are basically just chopping around sideways at the top of the range. Could you call this a bullish consolidation? For sure. But when we zoom out to the weekly, we see once again, week after week after week of red histograms, left the bullish control zone, have the hard sell signal, and now we have a smaller channel here, the one we were just looking at, but we have this massive channel that goes back for, you know, the last over a decade. And essentially we were chopping around in the top of the range. We came down to the bottom of the range. We're back chopping around in the top of the range. We could easily see this thing chop sideways or down for the next year plus. We could easily just go sideways here for a year and do nothing. We could easily burst back up here to the top of the channel, or even just, you know, sell back off to the heart line or to the bottom of our yellow channel right here. I would not be surprised by any. But when we look at this weekly, it looks very weak. When we look at the monthly, it's now just barely starting to roll over the stochastics, but still looks very bullish overall, and did get bought up at the end of the month there, leaving a nice bullish monthly candle. I think sideways is probably most likely for industrial sector. And again, I think that trade got ahead of itself. If we see this infrastructure package and everything coming through, and, you know, how long is it going to take to even get passed officially? How much is it even going to be right now? Is it going to be spread out over, you know, the next 5 years, 10 years? Is it going to even the first dollar going to get spent anytime in the next 2 to 5 years? It's probably going to take minimum 2 to 5 years for an infrastructure plan to get passed, and then them to actually start spending money with permits and all that stuff, you know. And then also you got to look at, what are the prices like for labor? What are the prices like for materials, for like the supplies to actually build infrastructure? Well, they're all extremely elevated. So, you know, you're going to get much less bang for your buck. So again, not particularly bullish in the short to medium term on industrial sector. XLK technology, you know, chopping around at the top of the range. Overall, very bullish. We're seeing a little bearish divergence here on the shorter time frames, but still looks very good. If we look at the weekly, we have crossed back above the slope line. We're still in the bullish control zone. We've got a bunch of green histograms in a row. Nice weekly candle last week. We'll have to see what happens. Or 2 weeks ago, last week's was just sort of a consolidation. But when we look at the monthly, closed at the all-time high, all green histograms. I mean, let's be real here. Tech is very strong. How is that possible, though? Because when we look at our tech stocks, most of them look like shit. Well, we'll have to take a look at it. You know, XLP, consumer staples, you know, we have this very clear channel we've been operating inside of. We broke out of the channel. We're consolidating. We have a bearish looking candle right here, basically a rejection. We'll have to see what happens. If this holds or just goes sideways here, I think we continue to the upside and get that measure move. You know, if we break down in here, it's going to look like a failed breakout. And I think we retest at least the heart line at $70 or the bottom of the range, 68. Again, not a ton of meat on the bone here for consumer staples. But in all reality, you know, Stimmy Check's going to be keeping this up for a while, you know, or whatever. Even if it's not Stimmy Checks, you know, easy financial conditions. People are going to spend money on, you know, consumer staples includes high-priced items. It includes low-priced items. It includes everything in between. And I think as long as there's easy money, people are going to keep spending money on the things they want. Therefore, you know, until we see like a true constriction of the economy or some deflation or stagflation taking place, I don't think we're going to see anything crazy going on there. XLRE, you know, real estate, this candle right here is pretty bearish. That's a very strong rejection right here. We did consolidate above that range. Again, we have sort of like a little resistance right here. We stopped basically at it. Is this going to continue to the upside? I don't know. We just got the hard sell. We clearly got rejected by the slope line. We flipped it over blue, but we see multiple day red histograms to the downside. This looks like it's very close to putting in a short-term top. On the weekly and monthly, still looks good. We're definitely seeing more weakness here. We're definitely already got the hard sell and crossing down. I would expect us to find support inside the bullish control zone as real estate tries to stay here. But now look, we have some serious fundamentals and technicals in place here. Okay, one of the big reasons this was going up is mortgage-backed security purchases and, low Fed funds rate, even though the Fed funds rate is not the exact same as the real estate rate. They're directly linked. If you have a 0 Fed fund rate, you're going to have a, 2 to 5%, loan rate for real estate. They're also, supply constraint on the market. If there's not a bunch of houses on the market, you would expect prices to go up. The demand is still there. There's easy money. So it's in creating more demand, and then there's less supply. So it's a double factor pushing up home prices, pushing up real estate. What does that mean in the end? Well, I think industrial, or I think the, what is it called? Moratorium just ended. I'm pretty sure August 1st was the end of the rental moratorium. So you're going to see all these people, basically all these landlords and everything, starting to file for evictions, or they may have already processed the evictions, just waiting to actually be able to evict you. So I think what's going to happen here, people are going to clear out all these tenants, these bums that have not been paying their rent, even though they've been getting government aid. They're going to clear all these people out. They're going to dump them. Those people are going to have to go out and look for a new place. And then meanwhile, you're going to have the actual landlords, tenants, owners saying, F this. If the government is going to socialize housing in the future, I don't want to be involved in it. I don't want to have to worry about something like this happening again. I just want to be free of this place and sell it while the prices are extremely high. So I think we're going to see tons of inventory coming onto the market at elevated prices. So elevated prices are going to cause less buyers, because the easiest way to curb demand is by having high prices. It's like the old saying, the best cure for high prices is high prices, because eventually people will just stop buying because it's too expensive. And then on top of that, you're going to have, a bunch of new inventory coming on the market. You have extremely high prices. So everybody's trying to capitalize on that. So we're going to see this get smashed down, I think, like lumber. Maybe not as dramatically, but I think we're going to see some serious weakness here. And then obviously, I'm talking more about like the personal side of things. But if we get into like the actual like business side of things, again, very, very bearish looking overall long-term perspectives. I do not think that we're going to just maintain this parabolic trend to the upside on real estate. XLU, and then, when they start talking about like doing changes with like the 1031 exchange and start taxing things differently and changing the tax code and this, that, and the other. Again, most of these things are bearish for the overall long term. If you want to stop people from investing, take away the incentives for investing. You want to stop people from working, take away the incentives for them going to work, or reward them for not investing, or reward them for not going to work. Either one of those, either a positive incentive or, a negative like punishment, either one is going to have the same effect. It's the same as increasing supply and decreasing demand, or increasing demand and decreasing supply. They're the same thing. It's just two sides of, the perspective, but they each have the same effect in the end. So we'll see how that all plays out. We're going to see, obviously, real estate market will typically stay strong for months and years after other markets start to crater or show weakness. It's not like stocks where people just hit the button and sell. You have to actually go through a process, sell, move out tenants, do, whatever. It's like a whole long process. So it takes a while for prices to go down. So I don't think it just like craters overnight or anything like that. But we will see weakness in a lot of other markets eventually bleed into the real estate market, or short-term weakness in the real estate market and then consolidation before further move to the upside. But I don't think it's sustainable. I really don't. I think a lot of people probably who got screwed, a lot of people who own 1 or 3 or 10 properties, probably at this point in time are like, look, I can't trust this socialist government, at least in the United States. I don't want to have to take this risk again. I don't want to have to worry about people squatting in my house for months or years without taking care of my property, not being able to evict them, not being able to collect rent, rental moratoriums, mortgage moratoriums, all this stuff's getting ready to end. There's a bunch of people who are probably going to have to pay back rent or back, mortgages after what amounts to a year to almost 2 years. So they're going to need that capital. It's the same as if you inherit a big piece of property and you don't have money to pay an inheritance tax on this piece of property. If you inherit $1 million piece of property and you have to pay $200,000 in tax, but you don't have anything but $1 million property, where are you going to get the $200,000 to pay the tax with? You have to sell part of the property, or you have to take out a loan or something like that against the property to pay these taxes. That's why you have to really worry about things like, death taxes and stuff like that. The same way that you have to worry about, back due bills. If you all of a sudden have to sell that property to pay off the bills, that's going to create more demand in the market, or more supply in the market rather. Utilities, this is a safety play. We got the breakout of our little channel here, came back down, retest it. If we consolidate here long enough, I think we get continuation to the upside and the rest of the measure move. We are operating inside of this bottom of the channel. Utilities did not make a new all-time high, much like our energy. So, again, these are some serious underperformers. But again, I think utilities more of a safety play, as where, energy was directly affected by lack of people like moving around, planes flying, gasoline being used to drive places, etc. So, we'll have to see how some of the micro factors can affect the macro on these things. Retail, XRT, still just chopping around in this ascending triangle. This is a bullish pattern. Could it easily break out to the downside? Very, very easily. This thing has been barely hanging on to the moving averages, and here we're just getting rejected. I mean, eventually, if it doesn't break out to the upside, it's just going to dump. It looks like it wants to dump. Hard sell signal on the weekly. All red histograms on the weekly. Going back to March of 2021. I mean, this looks terrible. It's consolidating at resistance. It could very easily just all of a sudden boost to the upside. But, if people are afraid and there's lockdowns again and, all these mandates and businesses are closing because of all this junk going on and increased taxes and increased prices and trying to pass it on to the consumer, you really think this thing's going to just burst to the upside? I don't. The knife shows us we topped out here on the monthly. We are putting in some clear bearish divergence here on the monthly. We are just showing extreme weakness at the top of the range here. Still all green histograms, so we could easily burst to the upside. But this thing looks like it is hanging on by a thread, in my opinion. But again, is there pent-up demand for retail? Maybe there was initially, but is there now? I don't really think so. I think a lot of people are, retail just buying throughout this whole situation over the last year plus. I don't think all of a sudden there's just going to be this huge burst. Like all of a sudden everybody's just like, oh, I have so much money and I need to spend it. Oh, I have so much pent-up demand and I need to, use up that demand. I don't think it's going to all-time highs, new highs, very, very strong. Probably the best chart that there is sector-wise here. Especially if we get, all of a sudden everybody needs another jab. Here comes round 3. Oh, now there's going to be a round 4 and a 5. And now we're going to need a jab every 6 months for the rest of our lives. Oh, this is just going to be the next flu. That's the type of stuff they're saying right now. So was it always the next flu? I'm not a doctor. I can't tell you that. But seems a lot like it, especially when the pros are coming out and saying that stuff. So again, not health advice, but in all reality, I think this thing is just going to keep going to the upside. I think if you're going to look at one single sector that's going to do well, with the most, in the most situations, if you look at the probability of X, Y, and Z happening and all these different things that could happen, if we go back on lockdowns, if the economy opens back up, if everything goes great, if, there's another round of, this coming in and everybody's getting sick again. Like, you look at 100 different scenarios and then you look at healthcare, and I think healthcare probably does good in 90 to 95 of those scenarios. So are we at extreme elevated prices? Yes. Is this thing going to just burst to the upside all of a sudden? Probably not, but I think it's going to slow grind, just keep on moving. We're not seeing the same weakness that we're seeing in everywhere else. This is the weekly chart now. We're seeing a bunch of green histograms. We're at extremely elevated levels. We could easily see, this thing come back down and cool off, but I think it would just be a bullish reset. I mean, this has gone absolutely parabolic, but I expect it to continue going absolutely parabolic. Obviously not financial advice. I'm not your financial advisor, but momentum wise, this thing is literally just gaining momentum and picking up. So I think it's more likely this gets a blow off top before it even just sells off. So is there still meat on the bone? Probably. Yeah, probably. XLY. That's probably the strongest chart we've looked at so far. It's making all-time highs, continuing to make all-time highs, and still has tons of momentum behind it. XLY, Consumer discretionary still looks decent. Retesting our breakout resistance back here, starting to lose a little momentum. Obviously a very bearish rejection candle. I think more likely than not, this, after this rejection candle, this looks like a gap close rejection below the 21. I think we're coming down here to like 177. Again though, on the weekly, we're below the slope line. It's flipped over red. We're at elevated levels. It's basically, it looks weak. Monthly still looks decent, but the Stoch gap is closing here and starting to roll back over. Looks okay for now, but look, if that tree starts falling, better get out of the way. US oil, still at like $73 range. I think this is going to go back up to highs. We got the 821 cross. We crossed it back to the upside. We basically did exactly what we wanted to see. We broke out from this ascending triangle. We came up. We came back down, hit our measure move, everything we were expecting, found perfect support at that level, moved back up, flipped our moving averages back to the upside. They are all flayed out, splayed out, whatever the word is, in the correct way. We have the 8 above the 21. We have the 50 and 55. We have the 89, the 200, 377, and the 528. Everything looks good here. This is what you want to see. It looks bullish. I think oil is still going higher. It looks like we basically just consolidated, retested. We got an SR flip. What was resistance is now support. Now we continue to the upside. This is so far from all-time highs, though. This is the situation that we always talk about. When we're in, God, I hate this stupid chart. When we're in a situation like this where, let me flip off auto and then zoom out here. Uh-oh, if I lose you guys, my power just flickered there for a minute. We got a storm coming in. Storm's coming, Annie. Basically, this oil has been in a downtrend below the 200 exponential and simple moving average since 2014. We finally went way, way down here, put in what amounts to a head and shoulders bottom right here. Very clear head here, shoulder, slope neckline, broke through the neckline, came up, got the measure move, came back down. We were above the 200 exponential. We were above the 200 simple, consolidated, and then we had the capitulation event take place in March 2020 when everything shut down. Now we have regained that level. So if you just took this portion of the chart out, we flipped over the 200 exponential and 200 simple and got the slopes to the upside on both of them here. If you took out this black swan event right now, all we did was just reverse that. So if you just imagine from April 2019 till March 2021 is not on the chart at all, it just looks like we're putting in a series of higher lows going to continue to the upside. Now, I don't like to just delete information off a chart and pretend like it's not there, but this to me looks like an extremely bullish buy coming in here. It looks like we're at resistance right now, getting ready to break through it. And when we do break through it, this looks like a giant double bottom pattern right here. We have a very clear neckline resistance right here. We have a low. We have another low right here. Basically just a giant W pattern. When we break through this area, I expect oil to shoot straight up to $100. Does it have to happen? No, but I think it's very likely oil is at $100 very, very soon. And if we take into, and I don't know if you guys can hear that thunder, but it is coming in big time. Might be cutting this stream short, whether we want to or not. The power gods have spoken. $120 is the measure move. I think $100 in this range right here is going to be tough, but we'll see. I mean, oil could be at new all-time highs here. I doubt it, but I think $100 is reasonable. Ooh, better be careful out there. This storm's close. We'll see though. This thing has flipped over the slope back here. Again, if we kind of like ignore that crazy action that went on last March, a bunch of green histograms in a row, well above the slope line. It is now blue. I think this thing is getting ready to go absolutely parabolic. We could easily see some chop right here. We're at a very key resistance, but more likely than not, this thing is going. It's getting ready to go. Or you can trust Cathie Wood, who says oil is going to $3 to $12 a barrel. So I guess if it goes to $3 to $12 a barrel, I will apologize to Cathie. If it does not go to $3 to $12 a barrel, I will expect her to apologize to me. So, Cathie Wood, get ready, because oil is not going to $3 to $12 a barrel. You're dumb. Jets, looking at the transportation sector, this thing broke down from key level, lost the 200 exponential and simple as support. We broke above it. I think this is going to go into a consolidated like pullback here, and then we're going to see what happens. If it cannot get back above the 200 exponential and simple, this is going to look like a failed attempt. We broke down from came back up to retest it, and then it acted as resistance, and we put in new lows. If we do consolidate here and get back above it, I think we go into a long-term bull market. But I just don't know if that's going to happen. It looks like a hard rejection to me. Looks like a hard rejection. We had our highs through here. Basically we're at levels from, back in, look, we basically lost a key support right here, broke down from it, came up on the weekly time frame and got rejected at the 200 simple, got rejected at the 200 exponential, and now it looks like we're getting rejected again, getting ready to just sell off. This looks bad to me. The weekly looks very bad. Transportation just looks like junk. We tried to cross the 821 to the upside. It got rejected. We closed the monthly right here. This looks like we're getting rejected off the slope line. I would expect continued downside here. Do we have to put in a new all-time low? No, but could this easily lose, 50% in value? It could easily lose 50%. And then if we look at Hale, this is a ETF also in the transportation sector, but it's got like rental cars and some other different stuff in there, just to kind of get an idea as to what's taking place here. Because the reason I like to look at the transportation sector, and somebody had called this out in the last video as well, but the reason I've been paying close attention to it lately is because it often is like a canary in the coal mine for what the actual markets are going to do. Because all of a sudden, all this stuff got to move around with like shipping containers and trucking and planes and cars, and all this stuff is all tied together for products to get where they need to be. So when we start to weaken, it means all of a sudden all the other industries are probably weakening because there's not as much demand for the transport to get the stuff to the place to sell to the people. So if this starts to weaken, it tells us that probably is telling us that the market is starting to weaken as people essentially refill like the supply chain that became depleted while everything was shut down. So that's what I think is taking place right now. And if we look at this on the daily, we're breaking down to the 200 exponential and simple, consolidating at these levels. Looks weak. If we look at the weekly here, again, we're going to see the same thing. We have lost the slope line. All red histograms. Looks very, very weak. The Stochs have crossed back to the downside here. And then if we switch over to our monthly, barely hanging on to the 8, but we're getting the hard sell with a red histogram for the first time. So this is, again, this one is all the other monthlies we've looked at. Looked still green, still bullish, still good. This one has got the 821, or I'm sorry, the stochastics crossing to the downside, hard sell, and we're getting ready to leave the bullish control zone. We're at the 8 moving average, and we have flipped over the parabolic SAR bearish, and then we have already our first monthly print right here. So what does this look like? Yeah, we probably get a reaction rally off this support level, but it looks to me like this is telling us, hang on, something wrong with these markets. Hello, McFly. All right, so UPS here next. Again, same thing. UPS and FedEx both gapping down, looking like a double top right here. Came back up here, tried to push back up, got the clear 821 cross, headed back down here to 200 exponential and simple. We've got some support here at like 177. We'll see what happens here, but again, looks very, very weak. Obviously did not do, I want to say UPS and FedEx both beat their earnings, but there was a slowing in their actual like packages delivered. And I think that was the real big problem with them. Clear bearish divergence here. Not as clear on the stochastics, but still present between the two stochastics as we put in a very clear higher high compared to here on the weekly. Looks bad. UPS looks bad. Back down here at the 8. First monthly red histogram. Looking like it wants to cross and leave the bullish control zone. Why is UPS all of a sudden slowing? Oh, everything's opening back up, so people don't need to buy stuff online anymore. I don't think people's psychology is going to change and they're just going to stop buying things online. I think that there's a serious slowing down taking place. FedEx on the daily, about the same thing. On the weekly, this is our FedEx gigantic pattern, what we were expecting right here. And again, you see, oh, what's all this stuff outside the chart? calm down. Let's look at a longer time frame. But again, looks very weak right here. Lost the slope line. Very clear bearish divergence. Look at that peak up here. Look at that peak up here. Look at the peak right here. Look at the peak right here. Very, very clear bearish divergence taking place on the weekly. And then if we look at our monthly chart right here, we'll see this looks like this was our topping right here. This was a, tried push up here, a throw over, a failed push to the upside in January of 2018, after which FedEx lost 67% of its value. So is it possible we're topping out right here, getting ready to have a massive sell-off right here and lose another 60-something% of our value, headed back down to $100? It's possible. Is it likely? Probably not. But I mean, in all reality, we'll probably get something closer to like a heartline move, and then some kind of like nice reaction rally off that. But even if we got like, let's say we got like a heartline move, something like that, where would that take us to? Probably somewhere around here. I would expect a target of like $181. Another but I mean, still, what is that? That's 30 to 50% of the value lost on this thing. Again, very weak here. Nothing else is showing weakness like these transportation sector. Canary in the coal mines. You guys hear me say it all the time. When that canary drops dead, you better be careful, because that poisonous gas or whatever is coming for you. Velocity of money, we see it drop down. It was 1.2 and now it's down to 1.19. So, again, this is every 3 months this thing updates. So, but yeah, that's it for those bad boys. Let's jump into our tech and rip through these. It's like tech and friends at this point in time, because there's a bunch of other like random junk in here as well. So yeah, you like those storm sound effects? That's actually just my alarm. It helps me sleep at night. There's definitely not a gigantic storm going on right now. I mean, some of that thunder sounded like it was like 6 inches from my head. So, Tesla looks weak here. It looks extremely weak in my opinion. Zero money flow, dude. It is dead. And think about how much money they have to print to simulate that. If they're getting 1/5 of the effect with the velocity of money, if before $5 was traveling around, now they need to print 5 times as much, or $100 was traveling around 5 times. It was the equivalent of $500. If now it's traveling around 1.2 times, they have to print 4.25 times as much money to get that same effect. So that is massively deflationary or stagflationary. Tesla on the weekly, it's trying to hang on to that 821 cross, but this looks very weak to me. It looks like a bearish. This looks like a bearish consolidation to me. I mean, we reset the oscillator and came down here, and now the oscillator is pushing back to the upside, but the price is not moving. Is it possible this thing just takes off and keeps going up? It is, but it looks weak to me. Hard sell signal on the monthly, 3 months in a row of red histograms. Tesla looks bad. Could we put in another high back here and take out this high, or just put in a lower high? We easily could. But I don't think that's going to be the case. We are getting the hard buy signal on shorter time frames. There probably is a scalp move to be had. It's going to be tough to get above 770. I think Tesla's good for a while, like done for a while. Airbnb looks terrible. We really don't even need to look at this one. Very bad. Closed below the 8 moving average. If we go the monthly, it looks absolutely terrible. This is our, we're basically closed now, our monthly below the open. So when this opens back up, could we get a pushback to the upside? Yes, but I think we probably get rejected. I honestly think we're coming back down here to retest the lows. Airbnb looks absolutely terrible to me. Absolutely terrible. Short term, we could easily see a move to the upside. Pinterest. Okay, look. How many times have we crushed it with Pinterest? This is literally the stock to trade. We crushed it with the sell right here and that rejection candle. Came all the way back down to the range. Got a nice trade back up, another 32% to the upside. Sold the absolute freaking top. Came back up here and sold off at a lower high again. I told you this thing looked like crap. And then what happens? A 20+% gap down. Wasn't that 20%? 23% gap down from our little high right here. So if we look at where we took profits on Pinterest, was right back here to where Pinterest is at right now. We can buy it back at 26% discount right now. Am I going to do that? No, not right now. Could it easily push back up to the upside? I think there's definitely still a scalp trade to be had right here, but I'm not looking to take a position in this. I think it's very likely going to come right back down to the bottom of the range again. I think it's going to put in another lower low. I mean, we're just a couple percentage away from it right now. It's like $3 off the low right here. I think we're just going to keep moving. Woo, that one sounded close. Keep moving inside this range. I think we're going to find a little support around like 55, but I think we're realistically coming down to like $47. They're man, I think they lost. Their user base was horrible. The amount of people they lost, and then on top of that, like the amount of time that people are spending on average on Pinterest went down substantially. I think a lot of this social media is going to get crushed as the world reopens and people stop just like sitting on the internet trying to like internet away their problems. We'll see though. But I mean, if we switch out to the monthly on this thing, look at that monthly. Oh my God. I mean, it's been 3 out of 4 red histograms in a row on the monthly since it topped out. This bearish engulfing candle is taking us back to October 2020 price action, wiped out all gains back to October of 2020, left the bearish control zone, hard sell signal. I mean, this thing looks terrible. The 21 on the monthly is at the bottom of the range at $50. So again, I think we're headed back down to $50 or lower. At that point in time, I'll probably scalp this bad boy right back to the upside again. Long term, how does Pinterest do? Probably okay, but short term, it looks terrible. Probably one of the worst charts. Speaking of worst charts, Wish looks absolutely horrible as well. Looks absolutely terrible. I expect this thing to continue to get crushed. I do not think this thing is bottomed out yet. We sold off massively, got what I would consider a reaction rally, a dead cat bounce, sold off the majority of that rally. Once we take out 50% of that candle, it looks very bearish. I think we get continuation to the downside. Just in advance, I'm going to tell you guys, have a good night, and I'll see you on Wednesday, just in case this stream gets cut short. Oh, and remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. I'll see everybody in the Discord private group before then, I'm sure. But you will not see me on a stream till Wednesday, assuming that we do get cut short tonight. Bumble, again, we did very well off this trade. Over 40%. Sold back off to the bottom of the range. There was definitely a scalp in play, but I just don't see it right now. I'm not looking to get back in this thing anytime soon. Looks decent. Looks like we bounced to 236, high or low. I think we could easily come back up here to $57. It's going to have a tough time breaking through that level, though. Man, this storm is insane. Baidu. All these Chinese stocks had massive sell-offs, had a little reaction rally. They're coming back up, retesting the breakdown. I think they're going lower. I still have my targets in place, 143 and 112. Are we breaking structure? Probably if we go down that low. Is it likely to happen? I really think it is. I think people are worried enough that even if... I think people just want to get out of things that look risky right now, and anything Chinese looks risky. Hard sell on the monthly. Bunch of red histograms, looks terrible. Below the 8 and 21, finding some support here. Let's kind of rip through these in case we do get cut short. I really want to get to crypto at least. Alibaba, again, breaking down pretty heavily. Let's switch to our monthly. About to get the 821 cross on the monthly. One of the worst charts we have looked at. One of the worst charts. We need to find support at this level or we are violating key areas on this long-term trend. We have broken down from our parabolic green support right here, flipped over the slope to the downside, all red histograms. Looks absolutely terrible. Very bad. Very bad. Diddy broke down, came back up, retesting the breakdown level, closing the gap right here. I expect this thing to get absolutely crushed. I expect it to get absolutely crushed. Look at that. Look at that monthly candle. That is absolutely terrible. You know, the weekly candle looks much better, but overall, not interested. BZ, Kanzun. Again, I have no interest in Chinese stocks right now. Maybe once I see them starting to carve out a bottom. I'm not trying to just catch a knife. Neo looks better than most, but again, when we go to the monthly here, just hanging on to the 8. Bunch of weakness on the chart here. Hard sell signal. Bunch of red histograms. One green histogram. We had one green rally right here, and then we just gave it all back up. I expect continuation to the downside. Next target on Neo is still $30. Taiwan Semiconductor, TSM on the daily, looks very weak, barely hanging on, by far the worst of the semiconductors. If we go the monthly, barely hanging on, all red histograms, hard sell signal. The weekly somewhere in between. very bearish. Intel, you know, looks bad, just range bound for literally like years upon years upon years. Multiple bearish divergence on our weekly chart right here. Bearish divergence taking place. Looks very bad. Very bad. And then the monthly chart, again, we see that bearish divergence. Very, very bad. Let me turn down my storm sound effects a little bit. They may be getting out of hand. I'm just trying to simulate some real life effects in the environment. It might be time to build an ark because I'm pretty sure the floods are coming. Metaphorically and like literally. On the monthly, looks very bad. Bearish divergence left and right. This thing looks like it's getting ready to just come back down to the bottom of the range. I expect this down at like 45 bucks, maybe even well below that. This looks like a massive monthly double top. I think Intel is getting ready to get crushed. But when it does, I'm looking to get in it. We'll see. Nvidia, very strong. Hanging on to 821 cross, but starting to show some serious weakness. Looks like it's about to lose the weekly. You know, this was what I was saying about semiconductors for a long time. You know, they were in high demand. This looks like it's getting ready to basically get the cross back to the downside again and put in the divergence signal at the top of the range. Easily could still see a push to the upside here, but, you know, I was saying that about the semiconductor space. You know, there's a huge bottleneck. There's massive demand for them. Everybody buys semiconductors, and then they can only meet so much demand. They can only make so much. It takes years upon years upon years to build these factories, to make these semiconductors, to get back online. And then who knows what demand's going to look like by the time they do. I think that trade has all but played out for right now. Zoom broke out, found support, and now it's showing weakness at the top of the range. Looks like it wants to move up higher here. I like Zoom overall long term, but the weekly chart doesn't look great. Looks like it's rolling over. The monthly chart, you know, looks like it's barely hanging on here. All red histograms for literally 6 months. You know, we're back down at, you know, basically like September prices. We wiped out the entire year gains basically so far. Peloton looks like it's just hanging on right here. I still don't like Peloton. It had a nice reaction rally here, but it looks like it's trying to save the 821 cross. Looks like it's rolling over on the weekly. Still looks decent. Monthly though, last couple months, red histograms. This market is not looking good. Lemonade, sideways to down, trying to do something. Just range bound inside this little like triangle. Rolling over to the downside. Got rejected at the 0 level on the TJD, TDMACD. Looks, I mean, that bearish candle is horrible. Looks like continuation to the downside. Lemonade's going to 0. Maybe not 0 literally, but definitely going down. ARKK, old Kathy loves the wood. Look, man, I feel bad for anybody who came into Kathy's game. Has not done anything since December 2020. You have made 0 money. You are either flat or upside down in your position. I told everybody about this months and months and months ago. This happens all the time. Everybody gets behind somebody who's doing great, but then all of a sudden they don't do anything after that for years to come. Hard sell signal, leaving the bullish control zone. All red histograms, one single little green shows up here, barely hanging on to the 8 moving average. You know, long term, I like this play. 5 years out, we're looking at investments for 5 years out. I agree. Your investments probably will be do well in 5 years, but why are you buying them now when they're just going to be going parabolically to the downside? You don't want to just get in at a lower price. ARKF losing the 821 cross, very, very bearish. Wiped out months of gains, straight back at December levels. Everybody who got into this year is getting crushed right now, either flat or down, wasting their time, wasting their money. Sucks to be them. What happened here? There we go. Bad arc. Uber breaking down from key levels on the daily, looks very weak. On the weekly, got the 821 cross, barely hanging on to the 89 moving average, very weak. And on the monthly, has broken down from the 8, finding support at the 21. Looks very weak. We could easily see a reaction rally off these levels, but Uber looks terrible. Uber looks terrible. Having trouble getting drivers, having trouble with regulations. I mean, Etsy, again, you know, tried to come up here, got a slightly higher high. This looks like a double top situation taking place here. Let's look at our weekly. Looks very weak. Tried to save the 821 cross, breaking down from those levels. Looks like it's about to sell off here, losing the 821 cross to the downside. Monthly looks, it's barely hanging on here. Hard sell signal, red histograms, looks weak. Square looks like it's very, very toppy here. Again, we're back at January 2021 levels. Looks like it put in basically a triple top right here, at least for now. Trying to rally up here, got almost nothing, just came back up and got rejected. Monthly chart, consolidating at the top of the range, hard sell signal, looks like it's getting ready to leave the bullish control zone. You know, last 2 out of the 3 monthlies were red. Again, very toppy, very toppy. What does that say about the economy? eBay, capitulation move right here, massive sell-off from all-time highs, coming back down here to retest resistance. Again, I did not like that this resistance or support didn't hold right here. We got continuation, and then this dirty, dirty looking candle. Bearish divergence playing out right here. Do not like how eBay looks here. You know, that was a 8% move in that candle. Basically all but bearishly engulfed the one before it. Showing weakness on the weekly now. Monthly probably still looks decent, but got to be careful with these things. You know, a lot of these things are starting to look very bad. PayPal, again, massive dump. Hit our target perfectly to the downside, the 618, as expected. I would expect some kind of reaction rally here, but who even knows? I mean, that is a dirty, dirty candle. That was a nice trade, 18% to the upside. Took profits at essentially the top of the range. Double top, coming back down. We put in a low here. We put in a higher low here. We want to see this come down and put in a higher low. I would expect this to come down to 261, possibly 252. We will have to see, but again, looks like a rejection off the slope line on the weekly. Looks absolutely terrible. That is a horrible candle. On the monthly, looks okay. Hard sell signal. Looks like it's leaving the bullish control zone, showing our first weakness on the monthly. Got to be careful. These charts are not lying, and there's more and more of them looking worse and worse. Matter of fact, why are none of the charts we look at looking good anymore? None of them are looking good anymore. We'll see like 1 or 2 charts out of like 50 that we look at on stream. Apple up here looking like a double top. We'll have to see. You know, it's hanging on to its parabolic support, but barely. Again, crushed its earnings. Saw nothing to the upside here. Looks like it wants to get rejected like everybody else did at that same level. We'll have to see. Again, holding strong for now. Obviously still have Apple positions, showing a little bit of strength on the monthly, but I mean barely. This man, and Apple did nothing. It did absolutely nothing for over a year, and then finally broke out to the upside, and now it's failing to do anything after that. Not good. Amazon, I mean, if this doesn't scream alarm bells going off right here, Amazon is back at July 2020 levels. Amazon has wiped out an entire year of gains. Amazon has wiped out an entire year of gains in a single daily candle, a gap down. Does it bounce back up and try to fill the gap? Maybe. Yes, probably. But it has literally wiped out a year of gains. Amazon, the #1 beneficiary of the entire Panda situation, has been wiped out. All the positivity, all the greatness, all the extra hundreds and thousands and millions and billions of dollars couldn't help the big bald rich man have Amazon come up here. So what does this tell you? New CEO, getting crushed right now. Do we get a reaction rally bounce here? Yes, we probably do. But Amazon has been carrying the markets, carrying the indexes, and now this is what we're looking at. Capitulation candle here, bearishly engulfing all the way back to 1 year ago. Anybody that bought Amazon, well, I shouldn't say anybody, but we're back at 1 year ago levels. You know, anybody who basically bought in this range, around the center of the range, is flat. At best case scenario, you finally bought the absolute bottom candle here, and you finally got the breakout. You're up 10% on Amazon. That's not good. This chart looks terrible. Bunch of red histograms, one single green one, hard sell signal, getting ready to leave the bullish control zone. Looks like a rejection at the top of the range. I would not be surprised to see Amazon back down at $2,889 very soon. Do we find some support here and try to bounce? Yes, we probably do, but I suspect, I mean, this is terrible. Terrible. And this is carrying the markets, and its legs just broke, and it's carrying the markets on its back. So what's that say about the markets? Facebook, again, carrying the markets. Looks absolutely terrible. What's going to happen with all this ad revenue when none of these companies are profitable in the next couple of years? All of a sudden, they're not going to spend as much money on ads. All of a sudden, who's going to suffer? Google, Amazon, Apple, all these companies. So, you know, are we looking at basically the first domino falling over? Probably. Hard sell signal on the weekly for Facebook, engulfing, well, half of the candle, bullish candle has been taken out. Still looks decent on the monthly. Let's look at googly eyes. Again, carrying the markets here. Hard sell signal on the daily. Bunch of red histograms. Weekly, taking out close to half that candle. Looking weak, but overall stronger than most. I mean, it's hanging on the monthly. Looks good still on the monthly. Netflix has gone sideways. We are back at July 2020 range. So this has gone sideways for the entire year. If you bought in the bottom half, you're probably even to flat. If you bought in the top half, you're down, you know, roughly 8 to 10%. Netflix should be absolutely crushing it. Instead, what's happening? Their growth is slowing. They're doing absolutely nothing for over a year. They were one of the top beneficiaries of this situation, and they have done absolutely nothing. So eventually people are going to get tired of this time capitulation and sell out, and this thing's going to break down. Hard sell signal, bunch of red histograms, barely hanging on to the slope line, barely hanging on to the heart line. We're headed back down here at 465. Could easily see a little bounce right here, but looks terrible. Looks terrible. And then Vodafone. Oh, this was the one we were looking at for a buddy. The monthly on this just looks so absolutely horrendous. Looks like a rejection of the 821 cross. Closed below the monthly. I don't want to touch this right now. Maybe long term, this could be interesting, but not anytime soon. Let's take a quick break, and then we will go to crypto and commodities. And I'm going to keep moving kind of quick here, guys, just because it sounds like the storm's kind of calming down a little, though. So, yeah, so let's take a quick break, and then we'll jump into crypto, and we can rip into the rest of the assets as well. So, and I'll jump back in chat here in a second and say what's up. All right, we're back. And in case you just showed up, remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Jump in the chat over here. Nice storm sound effects. Yeah, they're pretty cool, man. I don't know. What'd you guys think of it? Was it a little too much? I turned them off for now, so we'll see. Maybe I'll turn them back up just like a little bit. Think China. I've never heard a storm like that in my entire life. Like that was by far the loudest like thunder. It was absolutely crazy. Think China market is an early indicator for world markets? Yeah, lazy boy. I've talked about this a couple times. Think about China as the canary in the coal mine. Again, using that same terminology. What happened? Back in November, December last year, they started what the whole rest of the world was going to go through, but months ahead. So here in the United States, we started going through it around like March, lockdowns, economy shutting down, everything getting scared. They were going through that in like November, December, January. So they were like a few months ahead. They started quantitative tightening a few months ago, and now here their markets are crashing. They started regulating like IPOs and all this other stuff. And now all these stocks are crashing. Like there's all these situations, right? And now all of a sudden you have, the Nikola one was a good example. They're talking about crypto regulation. They're talking about insider trading. They're talking about this, that, and the other. It seems like we're just doing the exact same thing, but a few months behind them. And then like, for instance, without like, pointing any fingers or anything, you have some places that sickness-wise, didn't go through everything the same time everybody else did. So the USA was a few months behind China. Well, look at places like Australia or New Zealand, that are islands. They were able to have extremely strict measures for a long time, so they didn't get hit at the same time everybody else did. But now all of a sudden they're having issues with it because, basically it was eventually going to come around, and now here they're getting hit with what everybody else has already gone through. So they're now experiencing what everyone else has already experienced. And then on top of that, you have all kind of macro effects too, like different housing bubbles in New Zealand or Australia or United States or, wherever, specific cities, specific countries, etc. So you have a bunch of little effects that are like isolated to certain areas. And then you have the whole global effect that's going on as well. So you got to factor in all that different stuff. But I definitely think China is the canary in the coal mine for a lot of these things that are taking place and going to continue taking place as well. So, yeah, lazy boy, I can do zoo animals next time. We could have like an elephant like in the background, or maybe like a lion or something like that, or just like a casual kind of like purring, maybe some bird calls. What's up, CW? Good to see you, my man. Welcome. Good to see you here. Welcome to everyone. If you have not said anything in the chat, I highly encourage you to do so, as I love when you guys interact with me. I do these streams for you guys, not for myself, although I do appreciate them as well, because, I just shoot from the hip on these things, without thinking. I look at charts and just tell you how it is. So it benefits me a lot of times also to just have like that bias, just like taking out what I'm thinking and just letting my mind do the technical analysis. And obviously, if you've been following the channel for any amount of time, I literally use the exact same things over and over and over again. And that's so important. Everybody wants to discover a new indicator or a new oscillator or a new thing or this or that or a new way of doing things or whatever. And it never works. It never works. You need to find something that works consistently over time. Indicators, oscillators, support, resistance, whatever it is. And then just do the same thing forever and become a master at that. And then you can slowly become better and better, like fine tune your skills. But before you can fine tune your skills with a, samurai sword, you need to become the samurai. So that's what we do here. You know what I mean? You become the samurai and then you fine tune your skills. You don't just start like fine tuning your samurai skills without learning the basics. So I think that's the problem with a lot of people is they try to like switch indicators or switch assets or like whatever. They never give themselves time to get to be like a pro at what they're doing. I can't remember what the thing is, but it's like, if you do something for 10,000 hours, you become basically like a professional at it. So what is 10,000 hours? A few hours a day for a few years. and then you're a pro, at that point in time, you know, a professional can make money off of what they're doing. So how many years does it take to become a pro? You know, you could probably have a couple months or a couple years of gains in the market, especially if it's just going up and anybody with a smartphone can make money. You know, you got TikTok channels out there, you got whoever out there crushing it. I made this much money on options, da da da. Well, it's easy to make money, it's hard to keep it. And that's why it's so important, especially I focus on this channel, two things. One, protecting your principal, because if you lose your principal, you can't make profits because you lost your stuff you're supposed to make profits off of. And then two, trade with the trend. If the trend is up, trade with the trend and expect it to continue going up until it doesn't. If the trend is down, get out of the way or trade with the trend to the downside. But in my opinion, if you try to fight the trend, eventually you get tired and you get swept downstream. So yeah, you can jump in a river with a strong current and you can swim upriver. You can. It's 100% possible. And that's making profits in a bear market, you know, by longing, or that's making profits in a bull market by shorting. You're swimming upstream. You're swimming against the current. But eventually you get tired. Eventually you cramp up or whatever, and the stream's going to just take you because nature never gets tired. Markets never get tired. So that's why you got to trade with the trend. In my opinion, that's why I'm so strong on trading with the trend. And in order to do that, you have to be able to clear and concisely identify the trend. And one of the hardest things to do is to be consistent in identifying a trend, especially when you're looking at different time frames. So if you come up with your own method or use a similar method to mine or my same method or whatever, you know always what means a trend, and you know that 75% of the time or 85% of the time or whatever it is, that once that trend flips in that direction, it tends to last for weeks or months or years, depending on what time frame you're looking at. So as long as you're trading in the predominant direction of the trend, even if you have short-term losses, if you're consistent and, you know, stick with it, eventually you'll be back in profit. And then when the trend turns, you have to be able to recognize that as well, because that's often when people lose their money, because they keep putting money into the market, keep putting money into the market, keep putting money into the market. And by the end, they're leveraged to the hilt and they have mad gains and they have so much money in the markets. And then all of a sudden the market turns and they have no dry powder left and they're leveraged. So all of a sudden they're taking massive losses. So eventually they lose all their gains and then they end up negative, and then they end up getting that call from old Marjorie Margin. Okay, and I'm not talking about that butter, baby. I'm talking about that margin call. Nobody wants that. Spike Keystone says, where do you see XRP pulling back to on this pullback? Under 70 cents, maybe down to support around 66 cents. We're about to look at that actually. XRP is on the list. So I think it's like the 5th or something asset. So we should be there within a couple minutes. So yeah, let's jump back into it. Take a look at Bitcoin futures chart. Okay, so what happened here? We basically ran up over the weekend, you know, sold back off, leading up to the open of futures, and then futures opened slightly higher than where our daily close rather, and then we just ran back down, still above the 89. We are still well above the 200 exponential and simple moving averages. We have the green histograms. We have a blue slope line. We're in the bullish control zone. This looks deceptively good. When we go to the weekly, we have crossed back above the 21 moving average, sold back off to it, but it is currently acting as support. Let's see what happens over this week. We are still very much inside the bearish control zone. We do have 2 green histograms down here, so it's starting to display some bullish areas or bullish, like, you know, signs. But we need to be very careful because this is what it reminds me of. Right here, we get a parabolic move to the upside. We cross back. We try to save the trend, you know, try to save the trend right here, get rejected, come back down to a slightly lower low, come back up, cross 821 to the upside right here, and then what happens? We put in a lower high and capitulate after that. So, you know, what we really need to do right here is we need to get follow through. We need to consolidate above this. If we lose that 21 moving average, it's going to look very bad. If we stay above it long enough, the 8's going to come back up here. We're going to cross it back to the upside. So what could happen? We could easily see what we've been talking about for months now, where we get like that July, August, September, October rally, maybe even through the end of the year. We could easily put in a lower high. We could easily put in a higher high, but that would give us basically our time cycle analysis top. You know, where's that going to be at? Is it going to be at 40,000? Did it already happen? Is it going to be at 50,000 lower high? Is it going to be a double top at 64,000? Is it going to be a new all-time high at 76,000 or 100,000 or a quarter million? Possibly. It's possible. And you know who's going to tell us that? The market. Okay? And nobody else fucking knows. Anybody that acts like they knows is a moron. Because no one knows. The market's going to do what the market wants to do. Any chain analysis, any this, that, and the other, fundamentals, it's all garbage. Because if the market decides, if the whales who own thousands or potentially even millions of Bitcoin decide they want to sell off at these prices because they're not convinced by the momentum of the market, this market is going to get absolutely crushed. I promise you that. And vice versa. If no one sells and everybody just keeps buying in, whales decide to buy in with millions or billions or trillions of dollars, the market's going to go absolutely parabolic. But we need to wait and see, because right now it still looks bearish. I'm sorry. This looks like we bounced to 21 right here. We now have the hard sell signal on the monthly. We have all red histograms on the monthly. Even with this slightly bullish candle last month, we still have a red histogram. And then we're opening red here, and we have 3 parabolic SAR red bearish dots right here. So we need to be very careful here. Very careful. This is exactly what you do. If, you know, we spoke specifically about that level, that $30,000 level, and how we're not going to just break through it. We come down and tested it 3 times. We're not just going to roll over and break through it. We needed a move to the upside to get people back in it to gain momentum to the downside. So does it have to break to the downside now? No. But this is a very common thing that you see take place. You break down from the 200 exponential and simple moving average, and this is the Bitcoin spot chart. You come back up and test the exponential and it fails. You come back up and test the simple, and then we have to see, we didn't even get up there. So do we consolidate here and then we get the test up here to 44,000? If that fails again and rolls over, this will look like a 100% typical, very, very reliable bearish beginning of a trend. If it consolidates back above this range long enough and we get above the 200 simple, I will get bullish back on these markets, stay bullish on these markets long term, and expect new all-time highs. But as an absolute fact, if we do not get above 44,940, this is going to roll to the downside, and that's how I determine a bear market. So if on the daily, the 200 simple moving average rolls over to the downside and loses its positive slope, we're in a bear market. And when was the last time we were in a bear market? Well, let's go back here. The last time we were in a bear market was back here. We flipped over from the bear market basically in April of 2020 when Bitcoin was $8,000. So we did pretty freaking good on the way up there. And same thing here. You know, if we go back a little further, you look at where did the 200, let's look at this price action right here. Sorry if I'm making you dizzy. This is what it looks like. The 2017 top, we come down here, we find support, we bounce it, we break below the 200 exponential and simple moving average. We come up, we get rejected at the 200 exponential moving average. We break down to a slightly new low based on candle closes, which is exactly what we did. Then we come up, we break above the 200 exponential moving average. We consolidate, we move up to the 200 simple moving average, but cannot break above it. We get 2 chests up here to the 200 simple moving average, cannot break above it. And then what happens? We lose the 200 exponential. I'm sorry, I might have said 200 exponential here. This is the 200 simple, the dark blue one. Get rejected, break down from the 200 exponential, retest the 200 exponential and fail. And then after that, what happens? We go into a multi-year bear market. And from that point, we sell off from the retest another 68% on Bitcoin. And we can never get back above the 200 simple. Here, the slope on the 200 simple flips over to the downside, and then it stays to the downside. You know, that was basically in June of 2018. It stays to the downside until our flip back here in April of 2019. So, you know, almost a year from when that flips over to the downside and 68% sell off. So, and then here we had a very quick one during like our Black Swan event here. We break down below the 200 exponential. We're below the 200 simple. We retest it, find resistance at the 2, break back above both of them right here, consolidate on top, and then it fails. We break down from them, and then you'll see here the 200 simple moving average rolls over. We now have a negative slope. We get back above it once more, and then this is when I said, back then, anybody that was watching my channel back here, I said, this is not good. We're barely hanging on to the 200 exponential. We're getting ready to capitulate. We are going back to retest our all-time lows or cycle lows back in the 3,000 range. And then here we got this horrible sell-off right here, back down to 8,000 from 8,900, and everybody said, no, we're going up, we're going up. I said, really? Because we're going way down, and then capitulation event. So nobody else was saying this was it. Everybody else was so sure we were going to the upside. Here, when the 821 crossed back to the downside, I got extremely bearish, and it looked like this was going to fail. So again, once we got the cross back here, parabolic uptrend after that, that is how I determine a bull market. So what would that look like on this chart right here if the same thing happens? It looks like we consolidate here, we come back up, we retest 45,000. 45,000, we cannot break above it or consolidate above it long enough to regain this trend, and then we sell back off, and then we see, you know, what amounts to another 8 months of downside and 68% sell-off. Does that have to happen? No. Am I expecting that to happen? Yes. Why do I expect that to happen? Because if you look at 1,000 assets on the same time frame or longer time frames over and over again, and you look at cyclical markets and what happens, the same thing happens over and over again. Does that mean that we cannot break above the 200 simple and then continue to the upside and put in new all-time highs? No, we 100% can. Is the probability right now 50-50? No, I would say the probability that we go to the downside from here and roll over these moving averages, I'd say the probability, even if we put in higher prices, even if we go up to $50,000, I think the probability at this point in time is 66% to the downside and we take out that $30,000 range, 33% to the upside and we take out the previous all-time highs. That is literally just based on technicals though. That's not my honest opinion. It's not saying that, you know, whatever fundamentals or whatever. That's actual chart telling me over and over again what happens. Here we have on the weekly, we'll see here, we're trying to, basically we got rejected at the 21, trying to get back above it, trying to cross the 821 back to the upside. But again, we have to be very careful because we could easily cross the 821 back to the upside. We did not do it back here in 2018. It got rejected here, or across the downside here, got rejected here, and then we capitulated. Here, we crossed it to the downside, we crossed it to the upside, and then it capitulated. So either one of those two things could happen. We could very easily still cross the 821 to the upside here and then roll down very easily. So I'm not saying that that's out of the cards yet, but if we cross the 821 back to the upside on the weekly, I'm not going to just immediately get bullish and say to the moon. And then, you know, monthly chart, obviously hard sell signal, bunch of red histograms, still looks absolutely terrible. Got a nice bullish engulfing candle. That was good, but overall, nothing has changed here on the monthly. Be very careful in these markets, especially altcoins. Again, let's look at our couple different indicators. The waddah explosion, we're losing momentum here. The volume is decreasing. We still have a blue slope line, which is good. It looks like we're topping out here on the Fisher Transform daily. We're getting more selling than buying taking place on the on-balance volume on the daily. Let's look at our weekly. Got a nice push up here on the weekly. We are still very clearly bearish, although we have lost the strengthening downtrend. When it was blue here, we were strengthening to the downside. Here, we're strengthening to the downside. Here, we're just going to the downside. Here, we're strengthening to the downside. Here, we're just going to the downside. So is this a dead cat bounce on the weekly? Probably. Could we easily get something like this where it starts to move back to the upside and then sells back off again, starts to cross back to the upside and sells back off, puts in bullish divergence, and then we bottom out? Yes, we easily could. Are we just barely hanging on to this as well? That means there's equal amounts of selling and buying taking place. So, and we're at a very key resistance right now. Not ready to get bullish on this yet. And then here let's look at our previous three tops here. All blue and green volume. You can't see it, but all blue slope line. Once we lose the slope line, we touch the blue again, and then it goes yellow and red and orange volume, which means we are very clearly in a downtrend or a bear market all through the bear market. Perfectly done. This basically calls the bottom when the slope line flips over on the monthly. And then again, the bottom when this peaks to the downside here. And then let's look right through here. Again, we have, let me zoom in a little bit, all blue through here. And then we start losing the volume coming off. We peak through the yellow here. We get one more dot of blue. And then we start selling off after that, bear market. Again, we top out here, put in bearish divergence at the top. This calls the bottom basically perfectly. And then we get below the slope line here. It does not actually flip over bearish until our consolidation off the next high. And then finally, what's happening right now, all blue slope. We have showed our first yellow has come in here. Could we easily see it flip back blue here for another month and we get a pushback to the upside? We could 100% see that happen. But what do I expect? Potential bearish divergence to develop if this rolls over, or else just continual selling. These markets do not look good right now. They do not look good. And if you think Bitcoin is just going to go parabolic, well, stonks sell off if that decides to take place, you are 100% wrong. 100% wrong. Because all the inflation hedges in the world, gold, Bitcoin, whatever you want to say is the inflation hedge, when the stonks start selling off, when we start dumping, everything's going to dump initially. Not even a bother with this one. Same thing. Let's look at Ethereum. Ethereum had a nice move up here. How did we know it was time? You know, we talked about this in the group. How did we know it was time to move some of our position from Bitcoin into Ethereum? We'll look at the Bitcoin to Ethereum chart in a second here. Took out that low right here, or that high right here. Saved the 200 exponential and simple. We're still well above them. Got the 8 cross back to the upside over the 21. Bullish control zone. All green histograms. Bounced perfectly the blue slope line right here. Did Ethereum just top out? Maybe. It's going to be tough to get above 2,855, but I wouldn't rule it out just yet. I did close part of my Ethereum position though, from, I can't remember what our entry was in the group. What did we take? The entry was 21.19. So we took that at 21.19. It went up over 20% from there. Took profits at I think it was 20 or 21%, and still have part of that position open for right now. On the weekly chart, we saved the 821 cross to the downside, much more bullish than Bitcoin. We left the bearish control zone. We have 2 green histograms. I expect this to come up slightly higher and then get rejected on the slope line before it flips over red. On the monthly, Ethereum still looks better. Doesn't look great. Hard sell signal, all green histograms still looks okay. So how do we know it was time to move from Bitcoin into Ethereum and shitcoins, which some underperformed? Here is our Ethereum to Bitcoin chart. Very clearly a descending triangle. We were down here at the bottom of the range. Once we saw this bouncing off the bottom of the range, it was very clear Ethereum was probably going to strengthen faster than Bitcoin was going to. So Bitcoin got its push up here, and then we took our profits out of Bitcoin, moved them into Ethereum. We now have a blue slope on Ethereum, hard buy signal on Ethereum. Got a nice move to the upside. I would expect us to get, rejected somewhere up here at the 0.068 Ethereum's to Bitcoin ratio. Eventually I expect us to come back down to the bottom of the range. Could Ethereum still run up a couple $100? For sure, definitely. Still looks good overall, in my opinion. Uniswap into our shitcoins. I basically at the 821 crosses on all these things that we're about to look at, I took positions. So took profits along the way. Still have part of those positions open. Most of them I closed over 50% of the position. Most of them are in a very nice profit. Some completely underperformed and look like crap. Smell like a wet dog. 20% roughly on the Uniswap position. Again, I expect this to underperform. It did not even get up to the 200 simple moving average. Basic attention token at the 821 cross here. Again, I think we took it at the 200 exponential, 26% to the upside. I do expect this to underperform as it did not even get up to the 200 simple moving average. Still have part of all these positions open currently. Dogecoin, by far the worst performer of anything. Any of the ones we look at here. We took profits on that initial push up and then literally did not even get back to that level again. I mean, absolutely pathetic. Absolutely pathetic. This thing is still above its 200 exponential and simple moving averages. It's at the 200 exponential, but it's still above the 200 simple. So this should have the best chart, and it's by far the worst performer in these last couple days or weeks. Polkadot, same thing. Took the position back here up over, what was it? Oh man, I can't remember where I closed it. I think we took profits right here, over 30% on that. Should have probably waited for the 89, but a complete underperformer. Didn't even make it up to 200 exponential. Definitely not 200 simple. Still have part of this position open. If it consolidates here long enough, I expect it to come up to $20. Going to be very hard to get above $20, but could come as high as 27. Does not look good. None of these alts look good. Chainlink is next. Up to the 200 exponential. Got rejected. Took profits along the way. Once again, I don't think I got actually quite that good of an entry on Chainlink. I think, I can't remember. It was either 17 or $18 entry on Chainlink. I think it might have been $18 entry on Chainlink. But it was like 24%. Again, absolutely phenomenal. But did not even make it up to the 200 simple moving average. Rejected at 200 exponential. Still decent. Still part of the position is open. XRP that you asked for, my man. XRP had a nice performance overall. It actually was performing while everything else was kind of slacking a little bit. 20% on XRP. Got rejected at, it made it up to the 200 simple right here, which almost no other cryptos did, including Bitcoin. Got a hard rejection at 77 cents. I mean, honestly, I would have closed the remainder of the position, or the majority of the remaining position right there, but I didn't even notice it. So took a nice profit on that one. Still have part of the position open. Still looks decent. 821 is still crossed to the upside. Still looks okay. But when we switch to the longer time frames on all these alts, they all look the same. They all just look like 821 has crossed the downside, and they're trying to defend or retake that cross, with the exception of basically Dogecoin because it went so parabolic, and Ethereum because it has stayed much stronger. Just about everything else looks much, much worse than those two. Pancake Swap, the underperformer. This one, you know, it barely lost the 200 exponential, but let me turn off the drawing tools. But held on to it right here, came up to the 200 simple. But what was the actual cross? And full disclosure, I did not take a position on this. 15% underperformer. One of the best looking charts on the daily. One of the worst performing assets through that last little push. Trying to save that 821 cross to the downside. Very, very sketch right here. It does not look good. The fact that it got denied right there, if it crosses back to the upside or saves that cross, could easily start to run. But right now, I mean, honestly, this thing could easily have a burst to the upside, but it doesn't look great as of now. Solana, this one looked very bad last week. Again, full disclosure, I did not have a position on this. It burst through that 821 cross. Probably wouldn't have been the best opportunity to take a position, but up about 20%. Pretty much par for the course. Looks decent. Not enough history on this. I think there's probably a chart that has longer history, but Cardano beads, Cardano, old Charlie, the Chucky coin. Again, one of the better looking charts as far as staying above the 200 exponential and simple moving average. Underperformer from when they got the 821 cross right here. Absolutely pathetic. Absolutely pathetic. Even if you sold the absolute top of the wick, 10% move. Even if you sold into the moving averages, 5% move. The cult is dying. Too many people drank the Kool-Aid and they are dead. No one is buying. Cardano is trash. All these coins are locked up. Like 75% of Cardano's supply is locked up. So if 75% is locked up, that means there's no one selling. So if there's no one selling and there was just any buying at all, it should have had more than a 5% move. So that means that, yeah, nobody's selling because there's a big cult full of followers that are hodling, that have their coins locked up. But who's buying? No one. So the cult has already reached maximum size. This is the next XRP, not making new all-time highs the entire bull run. I mean, this one did actually this time, but I'm just saying it's acting like XRP is probably, this is probably going to do what XRP did this bull run, next bull run. Bitcoin dominance. And I shouldn't even say that because there's a possibility eventually Charles will actually do something that he says he's going to do and he'll be successful and there'll be smart contracts and it'll take, but right now the dude is just talking out of his ass for literally at this point in time, 4 years of Charles Hoskinson making promises, getting on and doing live streams, telling everybody how this is going to happen, how that's going to happen, the Ethereum killer, the next this, the next that. The dude has not delivered anything ever. Charles Hoskinson is like the worst deliverer ever of all time. At least Elon Musk makes crazy promises and then delivers awesome, but not all his promises. Charles Hoskinson makes crazy promises and never delivers anything. He's like, look what we did, guys. We made progress, but didn't achieve anything. Great job, Charlie. Great job, Chuck. All he's doing is just sitting by a vat, stirring up Kool-Aid and passing it out to his cult, okay? And then soon they're going to all drink it and they're all going to die and then there's going to be nobody left. There's no one buying now. So once people start unlocking their Cardano and selling, it's, you know, it's going to be like big shit on the market. Let's be real here. Because, you know, all the yields you're getting, locking up coins while they're going down 25, 50, 75, 90% while you're making 10% in yields, that's a net negative. Bitcoin dominance had a nice move up here, did exactly what we said, made it up to 21 on the weekly, got rejected, holding above the 8. I expect, again, still this little alt rally to run. I expect Bitcoin basically and altcoins to take turns running up here. I think Bitcoin's going to consolidate and then run up and try to get above the 200 simple moving average. I think it's going to get rejected. I think alts are going to try to do the same thing. And then eventually, I think they're going to all sell off. And then Bitcoin's going to hold its price better. Bitcoin dominance will go up while altcoin dominance goes down. So I think this will move to the upside. Our next main target to the upside is like 54, 55%. Total market cap tried to regain that slope, got back above the 821 cross, got a pretty strong rejection of prices right here, but consolidated on the weekly. We're likely, if we can just maintain above 1.5 trillion to get the cross back to the upside. Again, that does not just make us all of a sudden bullish. It just makes us think we're going to get a lower high. We could easily see a 1.78 trillion market cap again on crypto before we sell off to the downside. And if we look at the monthly, and it is possible we go to the upside here. All we did was just save the 8. We got the hard sell. 3 monthly reds in a row. Crypto looks done. It looks done for the cycle. Robinhood, we're looking at this IPO. I have it on the 15-minute right now because there's just no time frame to look at. But basically, this looks like just a sideways consolidation. You know, we're below the IPO price. It IPO'd at $38. We're down to 35, down about 10%. At the low, it was down. I mean, if you went from IPO price to the bottom, it was down 12%. If you were the idiot who bought the absolute top and went down, you know, it was only 16, 17%. They were saying this is the worst IPO ever, or like one of the worst ever. It's still not that bad. Let's see what happens in the next couple weeks, though. This chart to me looks like a dead cat bounce to a lower high, and then it's going to continue to the downside. Close under the 1 hour 8, and then we can't, there's nothing else we can even do. I mean, this is our daily. Massive sell-off, and then indecision candle. So what is an indecision candle? Typically, I give favor to the predominant trend. So if the predominant trend is gigantic red candles absolutely crushing your face, I think probably the next candle is going to be a gigantic red candle absolutely crushing your face. But again, we'll go back to 15. We'll leave it up here. We'll take a look on Wednesday. We could easily, you know, the 821 is crossing to the downside. That was our cross to the upside. It did nothing. Now we're getting the cross back to the downside. This is a pretty bullish candle right here. But again, I think it's just going to continue to get crushed. Coinbase. When people buy into IPOs, they expect a nice pop, like 20, 30% move, and then they sell. When they literally just go straight down, like Coinbase or whatever, which just so happens we're looking at right now, what happens? We get an initial bounce to the upside and then selling. And bounce to the upside, selling. Bounce to the upside, selling. How long did it take from when Coinbase did its, it's not actually an IPO, it was a direct listing, but same thing. April of 2021, and then it bottomed out here in May 2021. So for a month, it just went down. We have like a couple days worth of Robinhood price action at this point in time. So expect at least another month worth of selling off. Coinbase tried to come up here. I told you I was not interested in it. Got rejected. 821 crossing back to the downside. It's trying to do something, but it looks bad. It's just doing what Bitcoin does for now. Long term, I like Coinbase. I don't like Coinbase. I think Coinbase is shitty. They suck as a company, but I like them as an investment because I think they'll continue to make money, especially as they make more money off of other services and less money off of fees, like trading. Riot Blockchain, just doing what Bitcoin did, underperforming in my opinion. Absolutely looks pathetic. Nice little bounce to the upside. Definitely was. Like I said, there's definitely a scalp trade to be had here, but I would rather just have Bitcoin. You know, it underperformed Bitcoin's move up here. The ultimate cult leader of all time, the cultiest of cult leaders, MicroStrategy. Again, I don't like it. Looks bad. From the bottom right here to the top, though, 40%. It did what Bitcoin did. It's a Bitcoin ETF. It's a fake Bitcoin ETF. But in case you're new to the channel and you don't know why I'm so hard on Michael Saylor and you think I'm just a dick and everybody's like, he has huge balls and Michael Saylor's awesome and he's great. This was the last time Michael Saylor got popular, okay? Let's look back at MicroStrategy and see what it used to look like. In 98, in June of 98, most people haven't been in markets, so they don't remember this. They don't remember what Michael Saylor did, okay? his stock was worth like $80 back here, okay? And then it ran up to $3,200. It ran up to $3,200, and he pumped this thing up like it was going to change the world 4,000%, okay? 4,000%. And this was the dot-com bubble bursting, okay? This was Michael Saylor got in trouble with the SEC for lying and had to pay millions of dollars in fines so he didn't go to prison, okay? Because he's a shady-ass scumbag piece of shit, and he faked legal documents. He did illegal things and paid millions of dollars in fines so he didn't go to prison, okay? And then after that, what happened to his piece of shit company? It sold off 99.86%. It sold off 99.86%. Let's just call it 99%, and we'll give him the benefit of the doubt. Are you ready to join a cult with a piece of shit cult leader whose stock went down 99%? Would you ever buy any stock ever that went down 99%? No, you should never do it. Here's a clue. No, the person in charge, the owner, the CEO, the person whose company this is a piece of shit, shady ass scumbag, or their stock wouldn't have went down 99%. They wouldn't have gotten in trouble with the SEC and paid thousands of dollars in fines. That is why I hate Michael Saylor. He is a bum ass piece of shit, lying scumbag. Okay, his company was total trash, literally from 2002 until he got into Bitcoin in 2020. So for 18 years, his piece of shit stock just chopped sideways and did nothing at $130. And then he literally started marketing for Bitcoin and selling Kool-Aid to the Bitcoin cult. Okay, so that's why I don't like Michael Saylor. That's why I think he's a bum ass piece of shit. And everybody should fucking not want anything to do with MicroStrategy. If you like Bitcoin, buy Bitcoin. Fuck Michael Saylor. He's a scumbag piece of shit. Rant over. You're welcome. If you didn't already know that, if you did already know that, you probably know not to have anything to do with Michael Saylor, who's a shady scumbag piece of shit. Because the next time MicroStrategy goes down 75% or 80% or 100%, okay, you know what's going to happen? It's going to turn out he didn't have all the Bitcoin, or maybe he fakes his own death, or maybe he loses custody, or maybe he was over leveraged and his position got liquidated. I don't know what it's going to be, but the fucking scumbag the whole time up here was pitching Bitcoin to protect his balance sheet. And then at the top of the markets, he was leveraging up to buy Bitcoin. So here it was an inflation hedge to protect your investments, to protect your cash on your balance sheet from inflation. And now it's, I leveraged up because Bitcoin is the future. It's Manhattan property in cyberspace. It's lightning. It's the ninja, the apex predator. Ugh, fuck Michael Saylor. He's a bum. You're welcome for the rant. Okay, so let's keep going now. Michael Saylor is obviously a shady piece of shit scumbag. And next we have GameStop. So GameStop, obviously 821 cross back here at 225. We have lost another $80 in value. Another, this is not unexpected. 100% called this out. Still expecting to target to the downside, the 200 exponential moving average of $135. Still expecting GameStop to get absolutely crushed. This is a meme stock. It was a short squeeze, and the squeeze is over. Do not get stuck holding the bag like an idiot. We are about to get the 821 cross on the weekly to the downside. GameStop is going down to $68 very soon. We will stair step down there along the way. This stock is a piece of shit. They have done nothing to change what their business is. And in this world, I know you don't need to make money as a business, but eventually, if you don't have an actual business, your business can't succeed. By Reddit traders and meme stock diamond hand hodlers. AMC, again, sold off here. Got the dead cat bounce. The 821 has crossed the downside. We cannot get back above the 8 moving average. It is going back down here to retest the lows at $31. After that, it's headed down to the 382 at $25.76. Stop buying call options and start buying put options. This is not financial advice. I'm not your financial advisor. These markets are extremely volatile. This is a short squeeze. You are not supposed to hold a short squeeze. The same way you don't hold a short, you don't hold a short squeeze. Shorts are temporary positions to take advantage or hedge yourself against downside. short squeezes are temporary long positions in piece of shit companies that are oversold to the downside. Hard sell signal on the weekly, multiple red histograms in a row. These dudes are all going to have pink eye very soon from throwing poop at each other and peeing in each other's mouths. They're all dehydrated. They're all going to be broke soon. I hope you took your money out and bought a house or a Lambo or something. Do not just give it back to the market like a fucking moron. Do not. This is not financial advice. You can give back all the money to the market. You can go back to being a peasant in your mother's basement. But I highly recommend that you at least buy yourself a house, pay off your mom's mortgage, still live in the basement, whatever. But at least take some money out of the market. Take out your initial investment. Take out some profits. Buy a cool car. Do anything but just give back the money, because you're a hodler, diamond hands. We're going to teach them a lesson. You will never teach the market a lesson. If the market wants to go down, the market will go down. How is AMC ever going to go back to new all-time highs? How is AMC ever going to do anything positive when movie theaters are dead? Streaming is key. You see what Scarlett Johansson is literally suing a company right now because her contract was to release Black Widow only in theaters, and then they released it on, what was it, Disney Plus or whatever also. So it cut into her pockets, and then obviously companies like AMC, who are the movie theater chains, are going to lose money because people just download the movie to their house instead. Movie theaters are dead. Stop being an idiot. Do not hodl. You're not teaching anyone a lesson. You're just going to look like an idiot in a couple years. Bed Bath & Beyond, getting rejected here, selling off as expected. Newegg, same thing. Hit our first target to the downside perfectly. Hit our second target to the downside perfectly. We have now wiped out all these gains. We have one gigantic candle left. If we lose this area as support, Newegg is getting ready to go back down to $10. Back down to $10 freaking dollars. Okay? So what was it? I think back here. No, what was it? Back here, I put our target in place to the downside here. So that was a 35% sell-off. The next one was the initial rejection here. So the next one was the second rejection from here. That was another 30%, 27% to the downside. And then if we assume we get a bounce back up to retest support at $20 and then we sell off again, that's another 45% to the downside. Do not get stuck holding meme stocks. Do not be the idiot who is holding these bags that will never recuperate. Please, for your own good. I don't care. You can lose all your money. You can give it all back. But let's look at Newegg. Newegg, in this entire bull run, going back to 2014, did not, with this gigantic squeeze to the upside, this massive parabolic run to the upside, did not even make a higher high from 2014. But again, if it was between this or MicroStrategy, I would rather not be involved with Michael Saylor. I'll put it that way. DraftKings, again, called this one out very clearly in a very bearish downtrend since $65. Kathy Wood says, no, it's the bottom. And then, nope, oh, guess not. Why didn't you buy back here then? Why didn't you buy here? And then look, another lower high. It looks like absolute shit. This is total garbage. How long before she says, oh, I'm selling these now too. I'm selling everything. Oh. Look, 821 cross back here. Have not been able to get above the moving averages. This is a very bearish chart. Anyone with half a brain can tell this is a bearish chart. You do not buy a bearish chart and try to pick the bottom out. And if you do, you immediately get out of the position on a scalp. You don't just sit back and hodl it down to zero. So that's it for our crypto and meme stocks. I'm going to jump back over in chat right here. I hope you guys enjoyed my rant for today. If you did not know about Michael Saylor and his scumbaggery, I highly recommend that you look into it. Don't take my word for it. He is a piece of shit. Okay. I'll see you guys over here. I see y'all talking. I appreciate that. Always glad to see people chatting it up. Let's see what we got. Let me scroll back here a little bit. Oh, quite a bit. Okay. Spike says, howdy. Good to see you, my man. Lazy boy, you have to become the market. Yes, you must become the market, young Daniel-san. Think like the market. Be the market. Flow like water. Let it flow through you. That's my Bruce Lee accent. Don't take it the wrong way. Spike says, where do you see XRP? Oh, okay, yeah, we already talked about that one. That was an older message. Your view on ETH to BTC. Yeah, we saw that, lazy boy. Hopefully I answered your questions. If you still have questions, let me know. No one wants it over $1. No, and maybe you know what could happen with XRP, Spike, is like, honestly, they they win that case or whatever, or pay a fine, and the SEC gets off their dick, and then all of a sudden it just spikes up to like $1 or something, but it just gets sold into. You got to be so careful with XRP. It is one of few cryptos, or one of the big cryptos, one of the top market crap. Sorry, that was subliminal messaging. That was a Freudian slip. One of the top market cap cryptos that did not put in a new all-time high this cycle. Very few cryptos did not put in a new all-time high this cycle. Most of them are piece of shit, dead project shit coins. XRP is one of the top market cap coins and did not put in a new all-time high. So what does that tell you? It tells you it probably falls into the piece of shit, dead cryptos. You know, other cryptos went up, you know, 300%, 500%, 2,000%. And then XRP didn't even put in a new all-time high. Dash also is a total piece of shit. If you guys like Greg Manarino, I like to listen to his stuff sometimes, but you know, he told everybody buy Dash. Dash did not even put in a new all-time high. He told everybody how bullish he was on Dash, never gave any reasons, got people buying in over $400, and now it's like $150. That dude is a fucking moron. He knows some shit, but he does not use technicals at all. And no matter what happens in the market, he will never change his mind. He will never change his opinion. He will just sit there and be wrong for 10 years and never change his mind. The only reason a lot of these people are right, these talking heads, these people is because they just stay bullish all the time, and we just are in a bullish market, you know, on stock markets or cryptos. You know, eventually you have to understand that we're going into a bear market. We're going into a bear trend. We're going into a consolidation. We're going into a, you know, pullback. Like, you're not an actual trader if you just buy and hodl and say, eventually we'll go higher. That is not technicals. That is not technicals. That's investing based on fundamentals or speculating based on fundamentals. But again, I like a lot of his content. He cracks me up. He's a total spaz. I hope I'm not as spazzy as he is, but he is entertaining and consistent at that. More ETH clones coming online soon. Oh yeah, there'll be a never-ending stop of ETH clones coming online forever. And once one after another will say, we're the new Ethereum killer, smart contracts, blah, blah, blah. And 99% of them will be total shit and garbage and eventually not put in new all-time highs cyclically. Even Ethereum, you know, how long have they been saying we're going to proof of work instead of, or proof of stake instead of proof of work? And they delay everything. They delay everything. They delay everything. So if they're the first mover and they're the best and they're the one that everybody else is built on top of, but they can't provide the service that they've been promising forever, you know, or the upgrades they've been promising forever, what makes you think some knockoff piece of shit fake version of smart contract platform is going to come in and do it better? Show me the developer that's going to be better than the robot, you know, Vitalik Buterin. He's not literally a robot, but tell me who's going to do what he does better, and, you know, maybe I'll believe it. But until then, I don't buy it. It's just a bunch of just cheap knockoffs. Yeah, oh yeah, 100%. Pulse chain, etc. Yep. Thoughts on Hex? I mean, Hex, look, Richard Hart, love him or hate him, he said exactly what he was doing. He did it, and he did it in the bottom of the bear market. I mean, tons of money made on Hex. I got mad respect for that man. He was honest about what he was doing. He had his, you know, the chain audited multiple times. He got plenty of lawyers to cover his ass so that he can't get in trouble for essentially like creating a security. He simulated the bond market by creating essentially a crypto. So props to the man. Do I think Hex is going to go parabolic? Do I think it's going to go to the moon? Do I think it has potential for long-term use? I don't know. I really don't know. Technically though, probably, honestly. But again, I don't own any Hex. So take it as you will. I'm Trusty Me says, have you read or heard of the book Rich Dad's Guide to Investing? If so, what do you think about it? Yeah, I have mixed opinions on Robert Kiyosaki. I have mixed opinions on him. His books are good. They offer excellent insights and important information. I think overall, I would say yes, I recommend his products. But as far as his podcast, some of them are unwatchable. I think he gets a little too political. I think he interrupts his guests a little too often, talks over people. He says the same crap over and over again. He always tells everybody about how he does everything great. I think he's great at exploiting the system, but I don't think that the majority of his... Here's the thing with Robert Kiyosaki. I don't think the majority of the information he shares is useful for the demographic he's sharing it to. I think he gives good information and good insights and good knowledge and good strategies for people that are millionaires, multimillionaires, or billionaires. I do not think he gives good advice, strategies, market ideas, etc. for people that are like average, white collar workers. I don't think for people that have $1,000 in the bank, $10,000 in the bank, or even $100,000 in the bank, I do not think that the advice he gives. I think he gives advice like he's talking to that demographic, and the demographic, younger people between the age of, let's say, 25 and 50. And I think his demographic is probably people that make somewhere between 30,000 and, $1 million a year. But I think the advice and the strategies and everything he gives, I think he's giving that, and the way he gives it is towards people that are worth, $10 million, $100 million, $1 billion. And I don't think, maybe he doesn't realize it, but I think that there's a huge gap between the demographic of who's listening to him and the demographic of who his information is useful for. So while I do agree with a lot of his literature and some of his books and stuff, and there's a lot of key information and useful information, and overall I think he's a positive force on the space, I think that he needs to be checked a little bit, because for the average person out there, his strategies and what he says to do with real estate and how to avoid paying taxes and where to invest and this, that, and the other, I don't think that that is applicable to the majority of people. I think a lot of these key influencers that you have to be really careful for are already extremely rich or have another side hustle or business, which is like his business, his podcast, his books, his game. He has all these streams of income, and then he has his real estate stream of income. He has his investment stream of income. He has all these other streams of passive income, and then, obviously what he's doing. But most people don't have that. So when he gives advice, when he tells people what to do, when he goes on these long things about how you don't pay taxes, this, that, and the other, that's not applicable to most people. It's not useful to most people. So I think that it's not good for the majority of people. As where somebody like, what is his name? Oh man, I can't think of it all of a sudden. Dave Ramsey? Is that his name? Dave Ramsey? No, is that right? Ramsey? I can't think of his damn name. That might be it. The dude who's always like, pay off your debt, pay off your house, pay off your student loans, do this, do that, invest in this. That, I think he gives, while I don't agree with everything he says, I think he gives more useful, more applicable advice to the majority of people who are listening. I think that overall his advice is not as good for like an established investor, but I think overall the smart advice that he gives is more applicable to probably 95 to 99% of the people that are listening to him. As where Kiyosaki is giving useful information for 5% of his audience and information that's good to know but much less useful to 95%, I think Dave Ramsey gives useful information that's applicable to 95% of his audience, while 5% of his audience is probably not that useful for, or it's not that good of information for. So I hope I made my point there as to the difference between how it's useful to people and who it's useful to. And it's the same thing with Michael Saylor as well. I don't disagree with Michael Saylor's idea that Bitcoin is a good hedge against inflation over the next 20 to 50 years. I do not think it's a good idea to be 100% invested in Bitcoin. Why not be invested in gold and Bitcoin? Because gold is thousands of years old and Bitcoin is speculative but has higher gains. But he acts like you're putting that money in there to protect it. But you don't, if you're leveraging up somewhere, you're not protecting the money you already have. You're speculating with someone else's money. That's my main problem with him, other than the fact that he's a scammer, a piece of shit. When you start off telling everybody that you're investing in something as a hedge against inflation, and then months later, you're telling everybody, lever up, borrow money against your house, borrow money against your business, take on leverage to buy something at extremely inflated prices after it's gone absolutely parabolic and is more than likely already been topped out for the cycle and is now going to go bearish to down for the next 1 to 2 years, while you're levered up in that asset, while we're potentially going into extremely uncertain times when economies could potentially crash, or we could be going into a 100-year bear cycle or Great Depression, I don't think that that's good advice to be giving people. But you know what? That's not up to me. But if you're a millionaire, if you're a 100 millionaire, a 10 millionaire, a billionaire, you can probably survive because you can borrow against that Bitcoin and pay the interest on the loans. You already have a company that everyone has speculated on, and you've made millions and millions of dollars based on the stock price run up. So even if you did borrow $2.5 billion and lever up to buy Bitcoin, chances are you're probably going to be okay in the long run, even if you got to sit out a 1 year or 3 year or 5 year bear cycle. You're probably going to be okay in the end. But normal people can't do that. Normal people that are investing or speculating on Bitcoin or crypto or even the stock market, if you've not been in the markets for over 10 years or already been through multiple Bitcoin cycles or invested in stocks for, at least like 5 years or whatever, this advice that people are giving is not good advice. This stuff that people are saying, speculate, levered up, always goes up. That's horrible, horrible advice for the longevity of success. And the majority of these people will get wiped out. I was in the markets back through the last big .com bubble in 2000, and I suffered massive drawdown and losses, and I sold stuff along the way, and I thought the markets might never recover, and I was young then, and I was new into the markets in like 98, 99, 2000. So, it left a bad taste in my mouth. And, there was years when I wouldn't invest in certain things. I wouldn't speculate in certain things. I was burned by the markets. I didn't want anything to do with them, along the way. That's what's going to happen this cycle to a lot of people. If we go sideways for 1 year or 2 years or 3 years or 5 years on stocks, if we go into another bear market, I saw this happen, through multiple Bitcoin cycles. All through 2017, everybody was massively bullish. People finally bought in when Bitcoin was $20,000. It went down to 6,000, 5,000, 4,000, 3,000. Everyone sold. Crypto was dead. Everyone hated it. I was selling off everything I owned to buy Bitcoin. I was literally doing everything I could to buy in at the bottom. Not financial advice, but telling people, friends, family members, everyone about crypto, how it was going to change the world. Nobody was involved in it. Nobody was interested in it. It was just crickets. Told you so. I thought crypto died. I remember at one point in time, I was looking to sell off my motorcycle, and one of my buddies was like, "Why are you selling your motorcycle?" I said, "I'm buying Bitcoin." He said, "Why are you buying Bitcoin? That's dead. It was a scam. It was a bubble. It was a pyramid scheme." And I said, "Okay, man." You can believe what you want, but it's going back to new all-time highs. It just might take a while. And I sold my motorcycle and bought a Bitcoin with it. And then Bitcoin went to $60,000. And I'm pretty sure you can buy any Bitcoin or any motorcycle you want for $60,000. So, but nobody was interested in Bitcoin. And then once it's 20,000, 30,000, 50,000, 60,000, all these people come back and they want Bitcoin again. They want into crypto again. It's all part of the cycles. And those people, the ones that bought in at 50,000, 60,000, whatever, they're going to end up burned. They're going to end up capitulating from the space, and then they're going to watch it go down, 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 and then run back up. And it's just the same cycle over and over again. So that's why I'm such a strong believer in making sure that the advice you take or, the people you watch or the influence you listen to are actually relevant to your space. If you're still working a regular job, you probably should not be listening to the advice of most of these people. You probably should not be looking at the strategies of most of these people. If you don't have enough side or passive income to pay all your bills, you probably should not be heavily speculating on markets. You should be either investing with a large portion of your portfolio or, saving up for a house or a piece of property or something like that. If you don't already own your own house, if your house isn't already paid off or you don't already have an extremely low, interest rate on that loan, if you haven't paid down all your debt, other than a couple percent interest rate stuff, I don't think you should be speculating with money. Because to tell you the truth, I would rather have a guaranteed 10 or 15% return by paying off those debts that I have rather than speculating and just hoping I make 10 or 20 or 50 or 100%. Because you're going to feel so much more comfortable once you don't have that debt looming over your head. And again, if you have a long-term loan on a house or something like that at like 2 or 3%. I'm not talking about that. I'm talking about anything over like 5, 6, 7% interest rate, credit cards, car payments, whatever it is. Pay that shit off, get done with it, and then you'll have so much more disposable income. I mean, that's my opinion, but obviously not financial advice. I'm not your financial advisor. Let's do some more TA. Oh, I got a couple more comments. Hang on. Pulse Chain, Copy of Eats, Richard Hart. Some books would you recommend? I mean, man, I'll make a list of books for everybody, but The Intelligent Investor is like one of my favorite books of all time. Um, A Bull in China. Wyckoff, analysis, technical analysis. Um, Hot commodities. I'll make a list and put it down in the bottom there. I've been meaning to do it forever, and people have been asking me about it. Warren Buffett's book is excellent. You just got to be careful because a lot of the older books are excellent, but not as relevant. And a lot of the newer books are good, but not as relevant to long-term trends. Because anybody that wrote a book in the last like 20 or 30 years is going to be talking about stuff that's only been applicable for 20 or 30 years. Anybody that wrote a book, 50 in the 1960s or something like that, like The Intelligent Investor, they're talking about bond yields when you could get 5 and 10 and 15% in bonds. So, you have to look at it all with a grain of salt. Same with Warren Buffett. A lot of his information is really good. A lot of stuff in his book's really good, but it's not necessarily applicable to as many people because they don't have millions or trillions or billions to invest. Let me jump through the rest of these and then we'll knock this out because the stream's getting kind of long. 30 minutes left before I want to call it. Yes, agree on Hex. Richard Hart took a position at 5 cents. Took my original investment out at 13 cents. Gonna let the rest ride. Yeah, that's great, man. You crushed it. You got all your money back, and now you're playing with the market's money. Evolution of a Trader by Bulkowski. Yes, that's an excellent book as well. Nice name drop there. Bulkowski is a beast. I always say Bulkowski. Bulkowski is an absolute beast. Yeah, that's another awesome one too. Japanese Candlesticks. That is a great book as well. Thank you, Spike, for throwing those in there. It's always hard for me to come up with them on the top, and I don't have my bookshelf like right here next to me. So, yeah, I only got into crypto the past November. Been absorbing knowledge like a sponge. Definitely made some mistakes early on. Yeah, for sure, man. But it sounds like you're educating yourself, and that's the key. I don't know how long you've been in other markets or whatever, but one really nice thing about crypto is that even though it's tied directly to the stock markets, it's also linked to that 4-year halving cycle on Bitcoin. And that's huge because that means that even though it moves with stocks a lot of time, it also has its own cycle within. So if you're smart, you can move your money from traditional assets into cryptos and then back accordingly and trade between those different markets. So gold chart. Gold is basically just consolidating slightly above the 200 exponential, but below the 200 simple. It has rolled over to the downside on the daily. I still love gold. I'm still all about gold, but we're not able to cross this 821 back to the upside. We got a hard rejection here. We got a hard sell here. This weekly chart looks very bad. We could save this chart if we start creeping back to the upside, but it does not look like that's what's going to happen right now. It looks like there's distribution taking place on the gold chart, in my opinion. The silver chart, this has looked much better than gold all through this consolidation period from putting in that last high. It did not put in an all-time high though, so overall much worse than gold, as gold did put in an all-time high. It is now below the 200 simple moving average. It is now below the 200 exponential moving average, getting rejected. It looks like it's trying to move up here higher, but again, this is bad. It is just now crossing for the first time. Gold crossed and then recrossed and then crossed again. The 821 to the downside. Silver never crossed the 821 back to the downside. And now here it crossed the downside on the weekly. It sold off immediately to our target at the 55 exponential. I expect it eventually to sell back down to $23. I think that will be at least a short-term buying opportunity. But it would not, if you told me a year from now, silver hits $20.68 or $20.75 or $21 roughly. If you told me that, hey man, you're not going to believe this, but 1 year from now, I was in the future and silver is at $20, I would not be surprised. In not one bit. Not one bit. And I know that sounds crazy and I'm going to hurt people's feelings, but it is what it is. And then here we have our gold silver chart. This is extremely important in my opinion. We had a very clear descending, wedge right here. We broke out of the initial red resistance, and then we had the orange resistance. We finally broke out of that. I expect our measure to move up here. We got the initial measure move up to some key Fibonacci levels, at which point in time we got the initial rejection at the 618. I expect us to consolidate here, possibly pull back down to like 67 silvers to 1 gold, at which point in time I expect continuation to the upside. Next main target to the upside is the 0.5 at 75. After that, our target at 78. And then eventually I expect it to get up here as high as like high 80s or low 90s. And then after that, don't get mad at me yet, silver guys, I expect it to massively sell back off and eventually hit targets in like the 40 silvers to 1 gold range. And why do I expect that? Well, because that's what it does. Last time it went all the way up to 91 silvers per gold, and then it went down to 30 silvers per gold, and then went up to 130 silvers per gold, and eventually I expect it to go down to 40 silvers per gold. But how long is this going to take to go up here? It could literally take months, even potentially a year to top out, and then after that we could get a multi-year like parabolic move in silver in comparison to gold. And if we look at the weekly chart, we'll notice that once we got our initial strong parabolic move here, we went from February 2010 to September 2010 in a sideways upward pattern here. And then here, we basically had the same thing happen, flip the slope back over to the upside, put in massive bullish divergence. It was very clear that this was getting ready to break out, and then we expected higher targets up here. Could it get rejected lower than that? For sure. I expected at least to get up to 80 though. And then obviously, when we look over at the monthly here, it looks like the monthly has clearly bottomed. I mean, if we take off all our drawing tools and just look at this chart right here, we're inside the bearish control zone. We got the hard buy, and then we go on a, how long does this last for? It's a 200% move in gold to silver ratio, and it lasts for, in months, 102, wait. Oh, why does it says it in days. 3,105 days. So about 10 years, gold goes up in comparison to silver from when it bottoms. So if we have 2 green histograms right here and we're at extremely low levels right here, is it possible that I'm wrong and we already got the sell-off all the way as long as it goes, and this goes into a 10-year gold to silver ratio to the upside? It is possible. I would rather be on the gold side of the trade until we see this top out and then get back into silver as it goes back down than be just sitting here holding silver, and then this thing goes on a 10-year gold to silver rally, like where gold gains value compared to silver. Do I think that happens? We'll have to wait and see. But got to be real careful. That's one, you don't want to be wrong on a 10-year trend that, we're potentially basically getting back above the 200 exponential and simple, potentially moving to the upside, or we just get rejected here and sell back off. But we got to wait and see. Platinum looks bad, consolidating under the exponential and simple 200 exponential moving average, simple moving average. I expect this thing to go down somewhere in between $800 to $950. Look at it as a buying opportunity. It's a massive underperformer, massively undervalued. 821 have crossed the downside on the weekly. Platinum looks very bad. Looks very bad. This could easily retest some of these lows here. But again, I look at it as a buying opportunity because I think long-term platinum is very undervalued, especially compared to palladium, and they essentially serve the same purpose. Imagine if you have something that's good for one thing, and then you have something else that's good for that, plus something else, okay? So it does everything the first one does, plus more. Well, if the thing that does more is undervalued because it's worth less than the initial thing, you would think over time, eventually, the price of the thing that does everything the first thing does, plus more, would eventually be worth at least as much or more. And that is platinum and palladium. Everything palladium does, platinum does, plus better. Okay? So eventually the shift will happen where those two things will come back in line with each other, and platinum will be worth more than palladium. So if palladium is worth, substantially more right now than platinum is worth, eventually you expect palladium to sell off massively or platinum to go up massively. So eventually I expect platinum to come back in line with gold and higher than palladium. And we can get into external factors of why it's like that, etc. But I'm not going to do it right now. First Majestic finally broke down, took out the low, coming back up, trying to retest it. We'll have to see. But again, this chart looks very bad. These junior miners look bad. We got the 821 cross to the downside. We got a bounce off the 89 moving average. I expect this to retest the 200. I think First Majestic goes back down to $10.75 It looks very bad on the weekly. Could it bottom out here? For sure. But is it happening yet? No. Could it find support at this area? For sure. Is it happening yet though? No. We could easily see this monthly candle push back up to like $15 to $16 easily. But again, hard sell on the monthly, sell, buy, sell. You know, multiple red histograms, looks bad. And what does that tell us? Well, it tells us probably silver is not going to do well here. Silver junior miners broke down from the 200, broke down to that key level we spoke about, took out our previous low back, or no, it didn't quite take it out. It's at the previous low back here. Again, I know you guys, you know, the silverbacks really want silver to go to the moon, whatever. Sorry, guys. Not happening right now. 821 have crossed the downside. This is a dead cat bounce as far as I'm concerned. You know, everybody's like, yeah, but silver's undervalued. It's going to $50. It didn't take out its all-time high. So what you're saying is silver is underperforming long term. So yes, eventually maybe it goes back to its all-time high of $50. But until it starts showing signs of that, let's assume $30 is the all-time high for the next 1 year, 2 years, 5 years, maybe 10 years. I'm not saying it's a fact, but right now it looks more likely than not. But again, we're just trading with the trend. We are breaking down on the monthly. We have a red parabolic SAR on the monthly. Last time we got a red parabolic SAR on the monthly, our silver junior miners, you know, from when they took out the SAR, sold off 55%. So make sure you're ready to lose 55% of your money just holding these silver junior miners. Does it have to happen? No. Did we just get the hard sell on the monthly? Does it look like crap? Yes. Could it be bottoming right now? Sure, maybe. USAS all the way down at the bottom, retesting those lows. Again, could it be bottoming? Yes, but I mean, looks like maybe a shoulder ahead, a shoulder, maybe a triple bottom. I don't know, man. I'm not just going to hold this thing and just ride it to the ground. Got rejected at 821 cross to the downside. That's a lot of just massive bearish selling, hard sell signal. I mean, this thing looks like it's getting ready to just roll over. I mean, it's been rolling over. It looks like a waterfall is coming. Tilray pot stocks, again, very weak. Very, very weak here. They got to bounce, a reflex rally, in my opinion, trying to reclaim the 200 exponential and simple on the daily. This is probably the best of the pot stocks. 821 across the downside, got rejected. There's almost no support down below us here. This looks like it is getting ready to roll back over. Got the hard buy signal, rolling over. Tried to get back above the slope line, rolling over. 821, tried to push up here, rolling back over. Could not close and hold above the 8. These pot stocks look bad. They really do, guys. ACB looks terrible on the daily. Tried to get a move up here. The weekly, crossed the 821 back to the outside. Couldn't do it again. Now it looks like it's rolling over. Looks like it's getting ready to pour out like a waterfall. Aurora Cannabis looks terrible. Could not even get a monthly close above the 8 moving average. This thing looks like it's coming back down to retest the lows. I would expect this to be at $4 before long if it does not show some kind of life here. This looks absolutely horrendous. Is it possible we still get the inverted head and shoulders? Yep. Am I banking on it right now? Nope. You guys know I was way out of this a long time ago. Take those profits, buy back in at a higher price, and be wrong. I'm not just going to ride it down to nothing. This is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Canopy growth, worse than any of them. By far the worst performer. Well below the 200 exponential moving average. Hard sell down here because it easily get. I mean, it just looks terrible. This looks terrible. 821 are crossing on the monthly. Hard sell signal. It's starting to just pour out. Expect waterfall here, ladies and gentlemen. $14 next target to the downside. $9 after that. Retest this wick back here. I'm not going to make any further predictions, but I would not be surprised to see these cannabis stocks just getting destroyed. And then maybe they're just going to say, oh, there's new regulations. Oh, it's this. Oh, it's that. Whatever. Show me the chart. I'll tell you the news. Cannabis stocks are about to get some real bad news. I don't know what it's going to be, but they're going to get crushed. And then people are going to say, it's because of this. It's because the chart looks like crap. That's why. URA, again, this trade got overplayed. It's played out. It's wore out. It's getting a dead cat bounce here off the 200s. I expect this to sell off. Uranium on the weekly, rejected, trying to save the 821 cross. Looks absolutely terrible. The monthly chart still looks decent, but it looks like it's rolling over, getting ready to leave the bullish control zone and get the Stoch cross to the downside. I expect to get an entry back down here in like the 16 or lower dollar range. We'll have to see, because these things could just pour out. No one likes uranium. No one has done anything with uranium for decades. No one has cared about uranium, and now all of a sudden everybody loves uranium. Check please. Have fun holding my bags while these things get absolutely crushed. I told you guys way up here, we're down already over 50% from some of these levels. I'm not surprised. I would not be surprised to see them continue to sell off. If they start to bottom out, by all means, I'll be right back in them. I'll let you guys know. UEC looks absolutely terrible, losing all momentum, bearish control zone, all red histograms, slope line has flipped over. Uranium looks terrible. Cannabis looks terrible. Most commodities don't even look this bad. They had a nice run up. We made a bunch of profits along the way. Time to get out and play with something else. CCJ, Cameco, same thing. Bounce to 200 exponential nicely. Dead cat bounce as far as I'm concerned. 8 and 21 rejection here. Getting ready to roll over to the downside. Looks absolutely terrible. No thank you. I'll be back later to play once no one likes you again. I will play with you again once you're the ugly girl in the room. But while everybody's telling you how pretty you are because you have a nice cleavage or you got a nice dress on or whatever, not interested. Have fun holding the bags, ladies and gentlemen. Not me. Copper, CPER, copper index. Looks toppy right here. I love copper. I love it in the long-term fund. You know, there's arguments for India and why copper is going to crush it. There's arguments for China and why copper is going to crush it. There's arguments for the United States and why copper is going to crush it. I totally agree. But right now, we got to be very careful. You know, it was very obvious this was topping out. We're breaking down from a key channel right here. We could easily put in a new high on this thing, come back up, and then get rejected. But we did break down from a key channel right here. So as long as we have lost that channel, I expect downside. We're very close to losing our momentum indicators. Still looks good here on the long term, but looks like it's starting to roll over. The copper chart still looks okay, but when something breaks down from a channel like that, retests it, and does not reclaim it, it looks to me like we're getting continuation to the downside. Lithium, LIT, cycle highs, still could easily continue up here. We still have our targets in place. The 1.382, I more than likely think we'll get up here to 86 bucks, the 1.5 at 88 bucks, or the 1.618 at $91. Still in a position on this. We are consistently putting in bearish divergence on shorter time frames. I don't like that. I think we're close to topping out on this. I think we'll top out off of a key Fibonacci level. We have some very clear bearish divergence potentially developing right here. But it is not the case yet. Again, long term, love lithium. This is great and everything, but played out. HYDR, we talked about this. This is a hydrogen ETF. Again, I'm looking for this long term to purchase this, but I'm looking to purchase it at lower prices. I think we take out the low right here. Right now, the volatility is not that crazy. I mean, from the bottom wick to the top, it's a 10%. I very likely think we get rejected here, chop around, and then we get this at a new low. I'm going to buy this once we get down to a new all-time low, but again, I'm going to wait for a key Fibonacci extension to do so. LBS1, lumber futures, trying to carve out a bottom here. Obviously had a massive sell-off already. Could easily see continuation in either direction. I think it's going to be very hard for this thing to move back to the upside, as no one's going to speculate on lumber at these prices because there's just a massive amount of supply sitting around everywhere and no one is buying it right now. We got to use up this supply. And I think lumber is a canary in the coal mine. Obviously, I was telling you guys when this was topping out back here on the daily. It's obviously on the weekly we were talking about topping out at 1,900 back here. Capitulated from then. I think lumber is going to be, lumber and transportation sector are telling us that there was problems, there were supply constraints, there was bottlenecks in the system, and now the bottlenecks are filled again. They're removed in many cases, and now there's ample supply, and it is all stocked up, and no one needs these goods right now. No one needs these services in the case of transportation right now. Will they need them again? Yes, eventually. What will the price be then? Well, we'll wait and see. But this is a very bad monthly candle. Looks absolutely terrible. Could easily see continuation to the downside from here. Could we carve out a bottom? For sure. But it's not going to happen overnight. Caterpillar is next. Again, this is another one of those charts where we had a long-term trending channel right here. We have broken down from it. This has been underperforming since then. I expect continuation to the downside. It's starting to look very weak on our longer time frames here as well. The 8 and 21 are crossing to the downside. The infrastructure play is played out. It was all priced into the market. It's going to be 1 or 2 or 3 or 5 years before this is relevant again. Back at $180, yes please. Back at $150, yes 100% please. Do we probably bottom out around 173? Probably, but I am a buyer for sure long-term portfolio on Caterpillar down at lower levels, but now no thank you. Deere has been slightly overperforming Caterpillar. It underperformed on the move down or overperformed on the bounce back up. Could it easily come back up and put in a new all-time high? For sure, but again, looks very bad here. Not nearly as bad, but just looks weak. I expect sideways consolidation to potential down. We did save the 821 cross here. Could we come back up, put in a new all-time high? It's possible. I think it's unlikely though. We'll have to see. We flipped over the slope red right here. Looks like we're going to get a lower high bounce right here and then sell off to some of our key Fibonacci levels. If and when that happens, we'll be right here to talk about it. Antero Midstream Corporation looks terrible, looks bad. Looks like we are losing key support levels. 821 crossing to the downside on the daily. The weekly looks even worse. We're barely hanging on to the 21, close below it. We're going to open below it here. We're going to try to potentially save it. Maybe that already took place. I told you guys already, I am out like trout on this one. I have no interest in just holding this thing while it sells off. The hard sell signal, the red, we have lost the slope. We're below it. Looks bad on the weekly. Still looks okay on the monthly. I like that we got the 821 cross to the upside. I like that we got basically a nice bullish move off of this area. I think it's very likely we retest these levels. I want to see it closing above 850 or consolidating in the next couple months, at which point in time I would be likely to take a new entry on this. But in the meantime, do not like it. Not trying to catch a falling knife. Cemex, again, another one of these infrastructure plays, broke down from a key channel, tried to come back up, retested, got rejected. We could easily still put in a new high right here, but I think it rolls over. Eventually we get our measure move to the downside. This thing could lose massive amount of value. I still like it long term. It's still great, you know, fundamentally and technically, whatever you want to say, looks great. On the chart right now, short to medium term, looks terrible. Multiple red histograms below the slope line, hard sell signal, leaving the bullish control zone, breaking down from a key bullish channel. No thank you. No thank you. Could we save this still? It's possible. I still have part of this position open, but I do not like this rejection right here, and I'm more likely than not going to just pull the trigger on an exit here, and then I'll just wait to see how price action looks. Cleveland Cliffs, steel company, again for one of the group members here. It reclaimed that channel. That's good. I like to see that. It did put in a new high here. Not all-time high, but cycle high. That's good again. We could easily see consolidation, continuation to the upside. We talked about these key levels, $28.70. After that, $35. After that, $46 is still possible. I do not think it's likely, though. I think more than likely than that, this is a throw over. I think we're going to end up seeing bearish divergence develop on our daily and the weekly as well. We have a high back here. We have a much lower high here. We're chopping sideways, slowly floating up. I think this is going to end up being some serious bearish divergence. That was our high here. We have lost that hard sell signal on the Stokes, and we're much below it, getting the hard sell signal. I think this is about to be bearish divergence, and we're going to see this measure move play out to like 15 bucks. I think this thing is going to get hit real hard, real fast when it does. I don't know, though. It could it still go up to 45 bucks? It definitely could. But I think more likely than not, it ends up at $12 before then. But again, we'll see how price action develops here. There's definitely still some possibilities here on this one. Definitely still some possibilities. It looks better than most of these charts we've just looked at. Ford, same type of thing. Consolidating inside this channel forever. Topping out at some key levels. Breaking down from a Fibonacci level. We were trying to see it maintain this level at $14. It's breaking down from it. It's breaking down from this key channel. It broke out to the upside here and tried to hold that. We were talking about how this descending, broadening wedge, that the resistance was strong here as it's been acting as resistance, but the support was much stronger because it goes back to basically like the CVD dump. We got the push up. We're trying to hold it as support. Could we continue to the upside? It's possible, but there's a bunch of fundamental stuff telling us that Ford's probably not going higher here. And if it does, it's not going to maintain it. Still in this position, but again, I'm very close to just getting out of this position. up massively on it anyway. But Hasbro, another one we were paying attention to. I expect this, I like this long term. I'm looking at it long term. I'm looking at this for some potential moves. I was looking at it for a scalp back here, did not take the trade, and then we went massively up to the upside off earnings and everything. It's getting rejected at that 786. I do not like how this looks on long-term move here. That looks like a topping candle right there. It looks like we're about to get absolutely crushed right here. I expect it to sell back off. When we turn on our moving averages, it looks even worse. We saved the weekly 821 right here, and that looks good. We are well below our slope line here. Our Stochs are still to the downside, and then we switch to the monthly is when this looks really bad. Well, I shouldn't say that. It looks good on the monthly. I'm sorry. It looks good on the monthly, and that's why I was looking at it. But the shorter time frames, I think it's going to get rejected. It's consolidating here at this range. I think we easily come back down and retest some of these lower levels, but we are crossing back above the slope line here. We are inside the bullish control zone, but I think we can get a better value play on this. And then if we turn back on the moving averages and turn off the drawing tools, we crossed the 821 back to the upside. We retested it and try to maintain it as support here. I think we could still get back down here to like $81. If we consolidate here long enough, though, I might get bullish on this thing. But honestly, we got to see. There was some serious bearish divergence from these points right here, and then it played out. We got a violent move to the downside. This thing got absolutely crushed and had a nice move up since then. If we get back above this 786 level and maintain on the monthly, I will probably take a position in this. Honestly, I probably will actually. But right now, that was a nice move up here. Do we come back down? If we come back down to fill the gap, I'll probably take a position on this. I like that it bounced the 200 exponential on simple. I like that it bounced the 377 and the 528. I like that it broke above this level. If we consolidate here long enough, maybe I'll just take that continuation play. But that's it for today, guys. Appreciate you bearing with me through the crazy ass fucking thunderstorm and also the rants as well. Hope everybody enjoyed the technical analysis today. Remember, this is not financial advice. I am not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Very much appreciate you guys and your engagements today in the chat. I'm going to holler at you guys who just said some stuff there as well. And also, Spike, do appreciate you dropping the name on those books. Excellent books as well. To anyone interested, I will post up a list of books also. Eventually, I know I've been saying I'd do it for a while. I really will do it, though. Spike says, I was smart enough not to buy the top, just miss out on a lot of profit. For sure, nothing wrong with that, man. What's up, Bill? Good to see you, my man. Morning to you. Always nice to see you showing up, and good morning. Damn it. Been loving the TJD Jewel and Jewel Thief indicators. Can't decide which one I like more. What's your preference and why? I like the Jewel Thief because I really like the knife, but the TJD Jewel is really good as well. If you prefer using like the RSI and the EMA of the RSI, either one is great. I like the knife better because it shows me like the volatility. But the RSI is great. Obviously, RSI is awesome. But you could easily just pull up the RSI on another chart. But the knife is proprietary. I built that. I made it. It works awesome. So obviously, I prefer that because it's something I made specifically because it's awesome. TJD TDMACD is also awesome. If you're not using that, highly recommend it. JP Morgan suppressing precious metals, says Spike. Yeah, you could argue they're suppressing them for sure. It's whatever. And any market is suppressed or manipulated or whatever. It is what it is. The fact of the matter is, why not just trade with the trend? The trend is they were up. Now they look like they're going down. I'm not going to sit here and talk about conspiracies or get mad when the asset I want doesn't go where I want it to do. I'm just going to make money on wherever it's going. And if it is suppressed, why invest in it? You know what I mean? That's my argument for everybody that gets mad at gold and silver prices. Why invest in it? It's in the best interest of everybody that has the money, everybody that has the power to suppress the price on gold / silver because they're monetary metals. It makes sense to suppress them so that we can use trash bag fiat currencies. If all of a sudden gold and silver start going absolutely parabolic, it's going to crash like fiat trash currencies, or vice versa. If they start crashing, gold and silver are going to go parabolic. So if all of a sudden gold goes parabolic or silver goes parabolic, people are going to lose hope in our central bank currencies or, current currencies. So it's in their best interest to make sure they don't go parabolic. You know, if they're inflation hedges, if gold's an inflation hedge, or they're real money, or, you know, whatever, all of a sudden if they go parabolic, what does that mean? It probably means that everybody lost faith in the current system. So are they going to do everything they can? Current banking system, current regimes, current governments, current, you know, rich people, current whatever you want to call it, powerful people, are they going to do everything they possibly can to make sure that that doesn't happen? Yes, they're going to do everything they can to make sure that gold and silver don't go absolutely parabolic. So I 100% think that they are quote unquote manipulated or suppressed or whatever. But the fact of the matter is that it's not going to change anytime soon. So I look at gold and silver as a investment or a bank account or a hedge against the system crashing. I like them because they're hard. I like them because they have 2,000 years plus of, you know, of, oh my gosh, I can't think of the word. They have 2,000 years of, you know, basically proof that they work and do what they're supposed to do and function. So I have 100% faith in gold and silver into the future. And I would bet on them over anything else in this world. But again, I look at them as more of a saving account, more as a hedge against the system, a hedge against inflation, a hedge against Mad Max type scenario. People say, who's going to buy your gold? Who's going to buy your silver if the world ends? Well, I guarantee you there's going to be people out there with farms, with fruit or water or bullets or guns or whatever that will still want gold and silver, because no matter how bad anything gets, no matter how bad the world gets, how many times have we gone through these crazy cycles and crazy shit happen? Look at the pyramids in Egypt, okay? Did people back then, gold was extremely, extremely valuable. It's all in Pharaoh's tombs and it's all over everything, and it was money back then, and it was precious, and it was, you know, extremely valuable back then. Well, look, that whole entire civilization got wiped out. All the pharaohs died. We don't even know how they built the pyramids. And now here we are thousands of years later, and look what still works. Gold and silver and precious metals. So no matter what happens in our current society, no matter what happens in a crash, no matter what happens, with the exception of someone inventing a gold machine that they can turn dirt into gold, or an asteroid full of gold hits the earth and there's just infinite amounts of gold, with the exception of basically those two things, I do not think anything changes. And I think the probability of those two things happening is less than 1%. Therefore, I think gold and silver are by far the most sound investments, but they're also, you know, they're a hedge against inflation. They're, you know, people get scared when stuff goes crazy and they say, oh my God, I'm going to stock up on water. I'm going to stock up on food. I'm going to stock up on whatever because it's only going to cost more in the future, because they're afraid of inflation. And over time, it's a fact that the prices of things, commodities especially, gets inflated over time. Because you can look at what sugar cost 100 years ago. You can look at what wheat cost 100 years ago. You can look at what coffee cost 100 years ago. You look at what it costs now, and it's more expensive. But if you look at the amount of silver or the amount of gold to buy that same amount of coffee or sugar or grains or whatever, it's probably within, you know, a couple standard deviations of, you know, that purchasing power. So back in the day, you could buy 1,000 pounds of coffee. These are just made up numbers. 1,000 pounds of coffee for an ounce of gold. Well, now you can probably buy 1,000 pounds of coffee for an ounce of gold. So what is the point of gold and silver? Well, you can buy up all these commodities expecting things to be more expensive in the future, but instead of having to worry about storing a giant silo full of grain or coffee or sugar, you can take a little bar of gold and you can bury it in your backyard or put it in a safe or hide it up your bum or whatever you want to do with it. And you don't have to worry about anything bad happening to it. You don't have to worry about upkeep costs on it. And unless you are a multimillionaire or a billionaire or whatever, you don't even have to worry about storage costs, because you can probably just get a big ass safe and hide it in a wall somewhere. People always say, yeah, but gold costs money to store, and there's third-party counterparty risk because you have to have someone store it for you. Okay, are you sure that you can't just, if you have a multi-million, 100 million, or billion-dollar house or whatever it is, you can't take some of that money and put a safe inside a wall hidden away from everything, you know, or completely put inside the wall that no one touches it. You build it inside the wall and it can never be touched by anyone and no one knows it's there to protect it with no counterparty risk. Yeah, right. Okay, so Tell me another one. The only way it has counterparty risk is when you're hedging against a collapse of your country, and then you want to store it outside of the country, so therefore you want to pay someone to hold it for you. Then you have counterparty risk. But that's for people that are diversifying against their actual country, against their like nation, wherever they live at or whatever. And again, I think that that's relevant still. But again, who's that for? That's for multimillionaires. That's for billionaires. That is not relevant to most people. So when most people say, oh, but there's counterparty risk. Well, you can buy, what is it? A kilo of gold is like $64,000, weighs like 26 pounds. And, you know, you can fit it inside of a shoebox. I mean, obviously you can't store it in a shoebox because it's too heavy, but so where's the counterparty risk there? You mean to tell me you can't pull off a piece of drywall in your house and stick that thing in the wall and then put the drywall back up and slap it back on and paint over it and no one knows it's there? You can't buy a safe and put it with your guns in your house somewhere safe? I mean, at what point in time, when does it get ridiculous? Well, I think probably once you're storing over like 10 to 20 kilos of gold is when it's probably a little ridiculous. So if 10 to 20 kilos of gold is your breaking point, what is that? That's like over $500,000 to like $1.2 million worth of gold. So unless you're worried about where you're going to put $1+ million, I think gold is the safest place with no counterparty risk to store your money. Do I think you should still have some crypto? Sure. Bitcoin? Sure. It definitely serves its purpose too. If you're going to try to transfer $1 million, I think Bitcoin is probably the best way to do that over gold, because it's going to be expensive to transfer, you know, all that gold, and you're going to have to get a boat or a plane or something. So there's arguments for everything, but don't sit here and tell me that something that's 10 or 12 years old is a better hedge than something that's 2,000 years old and you can still find in pyramids and sarcophagus buried thousands of years ago in ancient Egypt or all around the world. So bam, gold rant over. Okay. And before we wrap this up, I promise I will respond to the rest of your questions. Not used to you guys being this active, and also I'm feeling awfully ranty today, apparently. Trading stocks is easier than crypto. Yeah, stonks always go up, so that's easier than crypto. Not a fan of Wall Street. Maybe it's time to stop being stubborn. Yeah, I mean, dude, it is what it is, but honestly, now's probably not the best time to be stubborn, but I totally agree with you. Let's wait for the next crash and then start investing in stock market or whatever. Let's make sure it's not a, you know, recession or depression right around the corner. Because honestly, the stock market doesn't look great right now. It looks good because most things or a lot of things are at all-time highs, but we're losing momentum. We're at elevated levels. There's a lot of uncertainty. I think now, right now, there's an opportunity cost with not holding a bunch of cash. I think now is the best time to just be sitting on dry powder, in my opinion, not financial advice. I would rather have more dry powder right now and just wait for various crashes to happen in various assets. Is it going to be the stock market? I don't know. Is it going to be crypto? I don't know. Is it going to be the housing market? I don't know. Is it going to be gold? I don't know. Is it going to be silver? I don't know. But I will bet you one thing with 100% certainty. I will bet you in the next 1 to 5 years, at least one of those things I mentioned goes through an absolute crash and we can get it at rock bottom rates. And I will bet you that if we're going to see hyperinflation coming, at least in the United States, I can't speak for everyone internationally, that our dollar is not going to hyperinflate worse than these other assets are going to sell off. But that's my honest opinion. And I'm also diversified in case I'm wrong. I'm not just sitting on a ton of cash. I have all these other assets as well, including stocks, cryptos, real estate, you know, gold, silver, et cetera, et cetera, et cetera, and other collectibles and valuables, et cetera. CW, good to see you, and you are welcome as always. Thank you, my brother. Appreciate everybody in the comments today. Appreciate you, Spike. Thank you for those book recommendations for everybody too. Whenever I'm trying to think of books on the spot, it's always extremely hard. I need to just write down a bunch of good books. RSI and EMA of the RSI is good for sure. Running both in tandem. Yeah, for sure. Hell yeah, man. Definitely no problem with the recommendations. Gold and silver has historically never been worth zero. Yeah, 100%, man. They've never even lost their buying power over time. They just fluctuate, and that's why gold-silver ratio is so good. It's not about, oh, I'm going to sell all my gold. Oh, I'm going to sell all my silver. It's, I'm going to be buying gold and silver consistently for my entire life. Which one is a better idea to buy right now? And that's why I like the gold-silver ratio. If I'm going to be investing $1,000 or $5,000 this month, am I going to invest that money into gold or am I going to invest in silver? I use the gold-silver ratio and momentum indicator oscillators on that chart to determine. The same way I determine, should I sell some Bitcoin now or should I sell some Ethereum right now off of my scalp trades? Hell yeah, brother. Good to see you in the chat, man. Appreciate how active you are and everything. And definitely appreciate everyone watching today. Hopefully you guys enjoyed the video and the soothing sounds of the thunderstorm. Next time we will do random zoo animals. We get some birds in effect or something like that. Maybe a monkey. I don't know. Maybe I'll mix it up. We'll get crazy. Have an elephant, a zebra, or a lion. But know that no matter what happens, no animals will be harmed in the making of the video. And also know that I'm completely safe. If anybody's just coming to the video and has no idea what I'm talking about, it was the most crazy thunderstorm I've ever heard in my life. But with that, we're going to wrap it up, guys. Careful here on Bitcoin, as the 8 and 21 are now confirming a cross to the downside for the 4-hour time frame, and it looks more likely than not that we're going to see continuation. We could easily see a retest back up to those levels to try and prevent this cross. If we get back above 40,700, we could prevent that 821 cross to the downside. But we are seeing some very clear triple bearish divergence on the 4-hour time frame. We have been talking about it quite a bit in chat. Some of the members in the group were talking about shorting on the second drive of bearish divergence, and we said we're waiting for the third one. And sure enough, the ugly bearish divergence has showed its head, and now we are selling off. Again, we could easily find support at these levels and continue to the upside. We'll be monitoring these charts every minute of every hour of every single day. And if you are new to the channel, make sure you like and subscribe. I'll see you guys on Wednesday, expecting tons of volatility in the markets this week. I am paying close attention to Amazon, Pinterest, and a bunch of these other stocks as well. I'm paying close attention to earnings reports this week and what is taking place here with some of these indicator oscillators. Paying close attention to the DXY, to the interest rates on the bond, treasury yields, and bonds themselves, and then also transportation sector. There is a ton of things to watch here, including oil as well. Guys, appreciate y'all. Appreciate the likes. Appreciate the subscribes. Make sure you take care of yourself. Love you all. Love the positivity. Love everyone who has shown their support by joining the trade group. I appreciate it. I don't have to do this. I don't need your guys' money. I appreciate every single one of you. Definitely appreciate all the thirst for knowledge in the community as well, and all the positivity. Before I get out of here, I want to remind you one final time, this is not financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research. Trade responsibly. And with that, we will get out of here. Crypto Trend Trader, it is 11:15 on Sunday evening, Eastern Standard Time, August 1st, 2021. And with that, guys, I'm out of here, and I'll catch you Wednesday. Yes, Spike, we have a private trade group. It is a paid group. If you're interested in getting involved with that, you can shoot me an email. My email information is available if you go to the YouTube page and it like the information page all the way to the right on the tab, it has my email there. But I think it's just, oh man, I can't even tell you off the top of my head. Hang on, I can tell you right now while I got you. It's crypto trend trader at gmail.com, one word. But yeah, if you're interested, man, for sure, be glad to have you in there, especially with the amount of interactivity. And you seem definitely knowledgeable. Drop some good books there in the chat, and very interactive. So we'd be glad to have you, my friend. Welcome to the channel, welcome to the community, and hopefully soon, welcome to the group. But with that, guys, I'm out of here. I will see you all Wednesday. Everyone in the group, I will see you all probably right after this and every time in between. Everyone have a good evening. Make sure you take care of yourself, take care of your family, mental health, eat right, stay healthy. Love you all. If there's crazy stuff going on wherever you're at right now, I promise you this too shall pass. The world will go back to normal eventually. Hopefully it'll go back to even better than normal. And you know, the future is bright, even though it doesn't always look like it. But with that, guys, I'm out of here. Crypto Trend Trader. Peace out.